All right. Hello, everybody. Welcome back to another episode of the Market Open. It is Friday, May 30th. Today is the last trading day of May. We do have May 31st tomorrow, but it's a Saturday, and then we enter into June. So we are officially done with May. Kind of crazy, but we are done. It is Friday. We got through a pretty volatile week, one of the biggest weeks of the stock market this year because we did have our Super Bowl, which was NVIDIA earnings. And it was good earnings, and we covered it yesterday, and it was great, and the stock was up like 5%, but now NVIDIA's down pretty much back to where it was before earnings because the president of the United States tweeted some things this morning that is pissing off a little bit of the markets. That's why we have a red pre-market right now, and we're going to analyze what Mr. Trump had to say, which is taking NVIDIA back down and honestly taking the rest of the market back down. I am really curious to see when the markets open if what Trump is talking about is actually going to have any meaningful impact on like equities. Moody's didn't do much. 20-year bond auction didn't do much. The 50% threat on Europe didn't do much. We've kind of been pretty resilient throughout the entire month. And then NVIDIA earnings were really good, even though NVIDIA is not like gapping up or anything like that. The earnings themselves were strong enough, I think, to justify some of the momentum that we've had. But Trump is tweeting this morning, and he is tweeting some stuff that markets are not necessarily happy with. So we will discuss that and keep going from there. We also got PCE data this morning, so we're going to start off with that. We got some inflation data that's looking really good, like really freaking good. And if it wasn't for the tariff volatility and the threats of tariff volatility or tariff inflation, I think we would be cutting rates definitively in June. Powell did meet with Trump yesterday in the White House, and they talked about non-political ways to understand the rate situation, even though I think Trump probably told him it's time to cut rates. But the PCE data is pretty fantastic, and if we didn't have the threat of tariff inflation, maybe we would start to cut rates. Having said that, we do have that threat, and we're probably not going to cut rates, but we got to see how this market ultimately turns out. Good morning. Good morning. Thank you, everybody, for being here. Also, yes, Elon will be at the White House at 1 p.m. We'll talk about that as well. That news broke last night. Also, the Knicks. Shout out to the Knicks. They're keeping this series going. Maybe Knicks in 7. Who knows? Maybe Knicks in 7, but they won the game last night, and hopefully we can see them going as well. All right. Thank you, everybody, for being here. Let's get into it. Good morning to everyone. Last trading day of May. Again, we are heading into June in a couple days, which to me is insanity that the year is moving this quick. Someone said in the chat last night, the older you get, the quicker time flies. And I 1,000% agree with that. So maybe it's also just, the fact that I'm getting older, it feels like time is moving quickly, but we are heading into June in the next couple days. All right. Here's what Trump said this morning. Here we go. This has the markets down in the pre-market. Markets are not like tanking in the pre-markets, but they aren't where they were yesterday, given this tweet right here. So he said, 2 weeks ago, China was in grave economic danger. The very high tariffs I set made it virtually impossible for China to trade into the United States marketplace, which is by far #1 in the world. We went, in effect, cold turkey with China, and it was devastating for them. Many factories closed, and there was, to put it mildly, civil unrest. I saw what was happening, and I didn't like it for them, not for us. I made a fast deal with China in order to save them from what I thought was going to be a very bad situation, and I didn't want to see that happen. Because of the deal, everything quickly stabilized, and China got back to business as usual. Everybody was happy. That is the good news. The bad news is that China, perhaps not surprisingly to some, has totally violated its agreement with us. So much for being Mr. Nice Guy. Okay, so a couple things here. Number one, Trump saying in this tweet that the only reason they reversed the China tariffs and took down the 145 to 30% 90-day pause was because it was hurting China is not true. I mean, yes, it was hurting China probably more than the United States, but it was pretty bad for the United States. I mean, even Gap yesterday was down 15% because their CEO said, hey, these tariffs are not going to be the best for us. We're taking a $100 million hit on revenue. And that ended up affecting that company. Now, the big tech companies can weather the storm. Obviously, NVIDIA taking a $8 billion hit to guidance, but still it's NVIDIA, so it's okay. But the idea that he reduced the tariffs in Geneva with Bessent from those negotiations because it was only for China's best interests, no, obviously our credit market was screaming. We needed some type of a deal, and that's why we did that deal. But apparently now he's saying that China is violating some of its agreements. He didn't attach an implication to what that means, aka are they backing out of the 90-day pause or something like that? Nothing was said from that respect. I'm sure we'll get more details over the coming days. But it is getting markets to be a little bit upset because it feels like a roller coaster. It feels like a roller coaster if we are back to square one when it comes to China. Now, my read on this is that I really don't think this is going to be one of those things that tanks the market unless Trump announces, hey, we are going back to 145% tariffs, which I attach like a 0.0001% probability that would happen. But nonetheless, this is how Trump is thinking about it right now. And it has to do a lot with rare earth minerals is what I've been reading in this morning in terms of what China was supposed to do based on those negotiations, and they're not doing that. And that's why you can see pre-markets right here down about 1% across the board. NVIDIA down about 0.5%, Tesla down 1%, Palantir up a little bit, Robinhood down 1%, and then you got the S&P down 0.32. If we recover intraday and we go green by the end of the day and we end out the week green, which means we would end out May up almost 5%, which would be the best May in 35 years. That means this market is very resilient. I mean, again, if Moody's, bond auction, 50% threats on Europe, and now Trump saying that China is not really doing the best and the negotiations are not going that well, if that could not tank the market, or if that could not meaningfully give us at least a 3 to 4% dip, then it just means capital wants to be allocated. And so my opinion right here is that this tweet that he put out is going to be a nothing burger, although it is, getting people to wonder, hey, what's going on with China? But I don't think it's necessarily going to have that big of an impact, but maybe I'm wrong. We'll see what happens as we get into the market open. Now, this tweet is consistent with what Bessent said yesterday about how talks with China are not going that well.
And what about China, specifically China, and that obviously started in a different place? How can you characterize those talks now?
I would say that they are a bit stalled. I believe that we will be having more talks with them in the next few weeks. And I believe we may at some point have a call between the president and party chair Xi.
So stalled. There was a time when the president thought that it was moving forward pretty significantly.
Again, I think that given the magnitude of the talks, given the complexity, that this is going to require both leaders to weigh in with each other. They have a very good relationship, and I am confident that the Chinese will come to the table when President Trump makes his preferences known.
All right.
So Bessent said yesterday on Fox, hey, the talks have stalled, right? And so that's not good, right? Like we obviously China is the biggest trading partner. One of the reasons the markets rallied as much as they did in May is because after Geneva, Bessent said we're making good progress with China. So Trump saying here that China is not only violating its agreement, but Bessent also saying that we paused the talks. I mean, that's just not good, right? That's obviously something that's causing the markets to have a little bit more pain. And it's also one of the reasons why people are thinking, hey, what's going on with China, right? Like, are we actually getting any meaningful deal? So that's what we got going on in the pre-markets, particularly with China. Now, one of the things that was actually getting the pre-markets to be a little bit more green, even though this China stuff is taking us down, is PCE data. And folks, we got really, really good PCE data. So if you take a look at this right here, our PCE index month over month. So here's a couple numbers, 0.1% versus 0.2 expected on the core month over month index. That's incredible. Personal income, 0.8% versus 0.3. That's incredible. That means people are earning more, way more than we thought. This is the best number since, I believe, April of 2021. Then personal spending, 0.2 versus 0.1 expected. That was great. Personal PCE index month over month, 0.1 versus 0.2 expected. That's great. And then year over year, 2.1 versus 2.2 expected. That's great. And then the number that the Fed cares about the most, core PCE price index year over year, 2.5. That is in line with expectations at 2.5. That is the best number since spring of 2021. We got a great PCE report. I mean, all of these numbers are very close to the Fed's target of 2%. If anything, they're either missing expectations by about 0.1%, which is great, or they're coming in just in line, which is also great. That means we're not seeing some dramatic run up. These are numbers for April. So we did have some tariff volatility. Now, next month will be the real test to see what the tariffs were like in May. But nonetheless, if we didn't have the threat of tariff inflation, I think we would be cutting rates easily right now. I think it would be very obvious to JPOW that you can't have a federal funds rate that's double the inflation rate, or at least 80% of the inflation rate. Now, the probability for a June cut is back down to 2.1%. Why? Well, it's not because of PCE data. It's because Trump just said that China talks are not going well. And the China talks are not going well. Remember, the whole point of these China talks are that we will reduce tariffs significantly to get concessions to be able to get some good deals done. if the talks aren't going well, and Bessent said the talks are stalled, and Trump said China's violating their agreements, well, markets are going to price in, hey, there's more tariff volatility, there's more chances for tariff inflation, there's less chances that we're going to reduce the tariff rates, which means Jay Powell's not going to reduce the interest rates if he's going to be afraid that there's going to be more tariff inflation. For the July probabilities, we are at 23%. So just under a quarter of a percentage of a chance that we would actually get the rate cuts. Now, maybe Trump is saying this for negotiating purposes, this whole idea that that China is violating its agreement, but whatever it is for why he's saying it, the street is definitely upset about it. Let's get a little bit of coverage right here from Trade Representative Greer, who was talking about this morning as well.
Chance that by July 9th, you have a deal with the EU. And by the way, what's the chance that you have deals with whether it's Japan or India or South Korea or some of these other countries prior to that?
Right. So with the EU, to your point, they've got 27 members that they're wrangling, but they have had a fire lit under them. They know exactly what we want. They've known for weeks and months even. They are moving. The call between President von der Leyen and President Trump went very well. They were responsive. I won't go into detail because, again, we do these negotiations in a confidential way. But we are, reviewing possible ways forward right now. I'll be meeting in person with my counterpart early next week when I'm over there in Europe. And so we expect to, we're trying to achieve agreements in principle with these folks to give the general contours of these agreements so we can know, how we can adjust our trade policies towards each other to be more reciprocal and more balanced.
Yeah, the president in that Truth Social post that we talked about right at the top, Mr. Ambassador, seemed peeved. Do you know specifically what he's mad about and what is he accusing China? Which violations recent, just since the Treasury Secretary got back from Geneva? What's he talking about that they've been violating blatantly since then?
Sure. Well, I mean, you saw the president's tweet. I mean, and you can just read in the news that China continues to, slow down and choke off things like critical minerals and rare earth magnets, et cetera. Obviously our deficit continues to be enormous with China. There was some discussion of them opening their market, something that they expressed they wanted to do. We're seeing them do export curbs. We're not seeing major changes. So, this is unfortunately par for the course.
I don't want to take a side either way, but it doesn't sound like there's been what I'm trying to, I guess, understand is, given the post that we just read that the president wrote, it doesn't sound like there's some kind of new twist to this necessarily, though the post would suggest maybe that there was.
Well, we have one agreement with the Chinese from Geneva. That's what we're focused on. It's fairly narrow. It's about the U.S. and China taking down tariffs and for the Chinese also their countermeasures. And some of those countermeasures, we're just not seeing them go quickly enough. Some they have, right? Some they have, and that's verifiable. And others, they're being slow. And, we're trying to work through that with them.
So I don't know, bro. I don't think the markets are going to react that aggressively to what Trump said about China, given that Greer is saying, hey, there's some things that we're concerned about. And he's not really saying it in a more dramatic, panicky type of way. He's just saying, look, the reason the president's tweeting about this stuff is because there are some issues that we're trying to navigate. And if they can get on the phone together, hopefully we can get some progress on that. And I don't think the markets will react that aggressively towards it, but we do have a pre-market that is red. Granted, we've had a hell of a week in the stock market as well. So you could definitely see some selling just based on the fact that it's a Friday. But the question is now going to be, when are we really going to make progress with China? Now, the real reason this is happening, like we all know the real reason this is happening, right? There is a simple reason, which I think honestly is the actual reason, even if I'm being a little hyperbolic here, for why this is happening. And we all know what it is, right? We all know what it is. I think everyone here knows why this is happening. The reason, yep, you guys got it in the chat. There you go. The reporter who called Trump a chicken literally is ruining everything, or has ruined everything, if Trump decides to embrace not being a taco anymore. Because she got at his soul, bro. She got at his soul by calling him a taco. Like, we all know Trump's ego is insane. We know his ego is fueled with the idea that he is the best person in the world, especially the best negotiator in the world. You call him a bad negotiator, bad at making deals? I mean, dude, you take away a lot of his energy. So I mean, I don't know why I know why she had to ask that, because it was the best rage baiting you could ever imagine. And she did it. And Trump fell for it. And there you go. It's like Taco Tuesday became Taco, who knows, Taco Summer, if Trump ends up feeling like this. But like, I mean, seriously, like by calling him a chicken, and he started to think, oh, the media is thinking that I'm not like serious about what I'm going to do. Now he's getting more aggressive. Now, granted, if the bond market or the stock market doesn't allow him to be as aggressive, he'll probably chicken out again. But it's definitely not something that I think the president wanted to hear. 4.426 on the 10-year. Now here, so I got to show you guys a couple of charts because we are actually seeing some good progress in the bond market, and hopefully this China stuff doesn't mess any of that up. But take a look at this chart. Foreign demand at yesterday's 5-year U.S. Treasury auction was the highest ever recorded since 2005. Now, this is the 5-year. It's not the 10-year, not the 30-year, not the 20-year. It's the 5-year. So it's a little bit more shorter on the end of the yield curve. But still, foreign demand. It looks like foreign money saying, all right, we think the United States is getting back to normal, at least for the 5-year bond. And that Treasury auction was phenomenal. So if we could get this on the 10-year, which is what really matters, and then hopefully as well in the 30-year, and get those well below 5% and 4%, then that would be very good. So we are getting some progress in the bond market. And then take a look at this. This is an updated chart as of this morning for PCE month over month. As you can see right here, we have now turned, based on that circle at the bottom right, negative for the first time since COVID on super core PCE, which is just a measure of all the different things that we look at, whether it's food and services, financial services, housing, utilities, healthcare, et cetera, all that aggregated. We are now negative for the first time since COVID on super core PCE. The Fed feels dangerously behind the rate cut curve. And the only reason they're not cutting, based on what Powell and Kashkari and Bostic have said, is because of their fear around tariff inflation. I don't think that's a reasonable fear at this point. I mean, like, look, maybe it's somewhat reasonable, but we all know Trump's not really going to impose these crazy tariffs. And we know these tariffs are going to eventually start cooling down. And look, I don't think we're near a recession because this is the thing about the Fed. Jay Powell's like, hey, like you guys might say that I'm behind on the curve, but we're not having a recession. So if we're not having because of the labor market. So if the labor market is good and we're not going to have a recession, then what is the argument for why, why like I should feel so upset, right? Or I should feel so aggressively getting ready to cut rates? Because again, there's a dual mandate. There's inflation and there's unemployment. Inflation is coming down, but there's that threat of tariffs, and then unemployment is booming. Barely showing initial jobless claims that are anywhere near recessionary levels. And so Jay Powell's argument is I get to hang my hat on a great labor market. The problem is if that labor market ends up getting nasty and we start to see jobs that come down in a more aggressive way, Salesforce, by the way, down about 0.4%, then that's not good. Right. And again, if the Fed waits until there are obvious signs of a recession, obvious signs of initial jobless claims at 350,000 a month, obvious claims of jolts going down by 1 million every other month, then that's not good. And then they're obviously going to be too late, and then they're going to cut. And, markets might like it, but markets will also have to start pricing in a recession. I don't think we're anywhere near that. And I think Jay Powell is using that as his margin of safety as well. But still, not the best thing in the world if he ends up becoming as late as he was in 2021. So, and for everyone saying he should, he doesn't need to cut, he should wait till things are weaker. I just I understand that perspective, but things are getting slightly weaker, even if the labor market is not, completely deteriorating. And the broader point here is that you're supposed to cut when you don't need to, not when you have to. Because when you have to, that's when shit is hitting the fan. And who knows, maybe things are so good that we're not going to have to cut for another year. But I think that's a little bit too optimistic in terms of what's going on with our interest rate situation. So we're going to see. We're going to see how this plays out. Again, if we did not get the tailwind of AI in 2023, I don't know where this economy would be. So thank goodness we had ChatGPT and NVIDIA actually take off. That increased productivity, increased earnings, all that stuff. But that right there is kind of saving him along with this labor market. And who knows, that could be what doesn't save him, because if AI starts taking away jobs, I mean, that could be something that accelerates unemployment, and that could also be a need for cutting rates sooner than later. Here's an update on Palantir. So Palantir signed a deal with Ecuador's custom agency yesterday. Very nice to see that Palantir is starting to go more international. They've signed an amplitude of deals over the past, call it 2 weeks. They had SAP, they have Ecuador, they have TWG, they have Bain, they have Fannie Mae. I mean, just massive, massive, massive deals. Ecuador is a really nice one because it's going international, which is nice to see. So Palantir right here, partnering with Ecuador's custom agency. And realistically, dude, again, I've been saying we need to see more international growth over commercial. U.S. commercial is great. U.S. government is great. But until we get that international growth starting to spike up, it's going to be tough for the street to see new vectors of growth. And I think this is one of the big ones that we need to see. So this is one that is nice. Now, there was a hit piece published by the New York Times on Palantir this morning, which kind of sucks. I didn't read the whole thing, but the title is Trump taps Palantir to compile data on Americans. Kind of sucks that they did a hit piece on them because the New York Times also did a really good piece on CARP. That Maureen Dowd piece, if you guys remember, that was like, it had all the pictures and had all these cool Trump quotes and stuff like that. But yeah, that was, that sucked seeing that. Again, I didn't read the New York Times hit piece, but look, it's the New York Times. They tend to be a little bit more left-wing. They tend to get clicks, and that's what they care about. That's really what their business model is associated around. Some of their reporting is decent. A lot of their opinion stuff is just nonsense, in my opinion. So I'm going to read it and try to understand it. I don't even have a New York Times subscription, so I need to figure out how to read it. But I wouldn't put too much weight into that because it's the New York Times. And they love to characterize this administration in a variety of ways. So I'll get some more updates on that later as I read this thing. But I saw the headline this morning and I'm like, all right, so got another hit piece on Palantir. Palantir stock right here, currently 122.61 in the pre-markets. Okay, quantum. So first of all, we did have Skrelly on yesterday. I cut up the interview and put it on my channel, and a lot of you guys seem to enjoy a lot of different parts of the interview. D-Wave right here down about 7%. IONQ down 8.8%. And then Qubit down about 6.1%. Rigetti is down 7.38%. I want to keep a big eye on these quantum names because now I'm curious, bro. Like, I did not know that Mr. Skrelly was this leveraged. If you missed the interview, he said he's literally borrowing money from his friends, his rich friends, and he's presenting them the short of a lifetime, in his opinion. And he's already down 50% on these shorts. And if they keep going up, his shorts are going to get nuked, and he's going to blow up his account. Theoretically, he might blow up his entire net worth, which is why he's borrowing money from other people. But I am very curious now to see how this plays out. Like, really curious. I just want to know, do these act, because he is confident they're going to zero. He said there's a 95% chance they're going to zero. I'm curious, do they actually go to zero? Or is he going to be wrong and they're going to, maybe go down 10, 15%, 20%, even 30%, but they're going to stay in a range, recover? Because he needs them to really go down, given he started shorting these things back in November. And they've 4 or 5x'd on him since then. So he needs a meaningful drawdown for his shorts to be profitable, not just like, 20, 30% down. And so now I'm curious. Now I'm very, very curious to see how this ends up playing out. And, we're going to see what happens here. But yeah, he was on the channel yesterday and he gave us some of his opinions on the quantum part of the market. NVIDIA right here, 138.34. NVIDIA down a little bit. Palantir slightly green. Tesla 354. And then Hood 63.10. Currently in the pre-markets. Okay, so at 1:30, Trump and Elon are going to be talking as well. So this one, it's good for Tesla shareholders, but it's also just kind of sad to see this happening. Nonetheless, I think a lot of you guys predicted that this would happen. So Trump tweeted last night, I am having a press conference tomorrow at 1:30 p.m. Eastern with Elon Musk at the Oval Office. This will be his last day, but not really, because he will always be with us helping all the way. Elon is terrific. See you tomorrow at the White House. Yeah, I think so. The partnership's done. The divorce is officially happening, and it's over. And it's over. So you got Trump basically saying, hey, I'm done with Elon. He's trying to be very cordial about this. This is also good for Tesla investors. The reason I say it's sad is because I kind of wanted Elon to, try to fix some stuff in the government. And, it's obviously not going to be happening now. And Elon's given up on it. So they're done. They are done. I do hope, though, as a Tesla investor, that Elon has enough of a good relationship with him so that when he needs Trump to pass some type of regulation or get some favors done or whatever, that Trump is willing to listen to him and he doesn't just shun him off. There's a lot of self-driving regulations that we still need to be able to resolve for robotaxis to succeed. But nonetheless, it does feel like Trump is having a cordial end to their relationship. And now Elon's probably going to go back to just being a technologist. So I really do doubt that Elon cares that much more about politics. I mean, the fact that he did the CBS interview, the fact that he's been saying all these things about Trump publicly, that he's been basically saying everything's Trump doing is kind of stupid without saying literally it's stupid. And I think Trump's also noticing, all right, me and Elon just disagree about things. I need to be a president. He needs to be an entrepreneur, and we need to move on. So this is going to be interesting. I wonder how they're going to frame this. I think Elon's agreeing to do this just because he wants to keep it cordial, but I don't think there's going to be anything exciting in this press conference other than them saying, all right, we're done, and we're letting the American public officially know that we're done, and now people can stop writing news stories about us, and Elon's just going to go back to Tesla. So it seems like that's how this is going to end up playing out. It did create a great dip for Tessie, though. I mean, if you were in Tessie, you got a great dip because of this. It's just now it's over. Now it is over. By the way, here's what Senator Rand Paul said yesterday about Trump's tariff policy. He's kind of agreeing with Elon in the context of what this trade deficit looks like.
It's leading us to believe that we're always being ripped off. We have a trade deficit with Bangladesh. We will always have a trade deficit with Bangladesh. They are poor and we are rich. The richest people in this dinner tonight all have a bigger trade deficit with Amazon than I do. The more money you have, the more you spend. Poor people don't have as much. They have less of a trade deficit. Bangladesh will never buy from us as much as we buy from them. But we're not getting poorer because we trade with Bangladesh. It's leading us to believe that we're always being ripped off. We have a...
So, I mean, you got a lot of senators that also just believe this whole tariff stuff is stupid. And I think, Elon feels the same. Remember, Elon, through Kimball Musk, was tweeting. I don't think Kimball Musk was tweeting this on his own volition. I think Elon kind of told him to say, hey, you should probably put out some stuff because I can't say it, back when, he had a really strong relationship with Trump back in like February, March, about the trade deals. And Kimball Musk, his brother, was tweeting every day that the trade deals or the whole tariff war is stupid. And Elon knew that it would affect Tesla because of all the different tariffs on imports for the parts that they create as well. And now the big, beautiful bill, he also thinks is stupid. So you got two things. Elon thought this whole tariff trade war nonsense was idiotic. He thought this big, beautiful bill was completely destroying the fabric of what he set up with Doge. And not to mention, in one of the parts of the big, beautiful bill, they are taking away solar subsidies, but they're not taking away oil subsidies. Elon also tweeted about that 2 days ago. And he was like, they are only targeting solar, not oil. You got to kind of like going back to 2016, Elon, that really cared about the environment and stuff. And Elon's like, why are we not getting rid of oil subsidies if we're going to get rid of solar subsidies? Remember, that's why Enphase was down 40%. SolarEdge was down 15% when those initial parts of the bill were passed from the House. So from that perspective, I think Elon is officially done with this administration and he's just ready to move on. And, he's going back to Tesla, which is, I guess, the bullish thing you can imagine for Tesla. I want to look at the Anthropic CEO. So remember, he had a quote a couple of days ago where he said, hey, everyone's going to be unemployed, or not everyone, but like a lot of people are going to lose their jobs because of AI and we need to stop sugarcoating it. Here's a video interview he did the day after talking about that. This is the only AI CEO that I know of that's actually saying we're going to have a crisis with jobs. A lot of the other ones don't want to say that because then they probably know they're going to get regulated. But here's him talking about it, and he's kind of ringing the bell that it is a bigger issue than we all think it is.
Entry-level jobs in areas like finance, consulting, tech, many other areas like that. Entry-level white-collar work. I worry that those things are going to be first augmented, but before long replaced by AI systems, and that we may indeed. It's hard to predict the future, but we may indeed have a serious employment crisis on our hands as the pipeline for the early stage white-collar work starts to contract and dry up.
What's the timeline here?
I would not be surprised if somewhere between 1 and 5 years, we started to see big effects here. I've heard a number of people talk about this in private. AI CEOs talk about this in private. CEOs of other companies talk about this in private. And I really felt that, the message that this is happening hasn't been getting out to ordinary people, hasn't been getting out to our legislators or Congress people either. And so I felt I needed to speak up on the record. I do think that this is something we can prevent this, but we need to act now. I don't think we can stop the AI bus. There are 6 or 7 companies just in the U.S. working in this area. I just run one of them. Even if our company stopped doing what it was doing today, all the other companies would continue. Even if all 6 companies started, then China would beat us. I think that's a big and important threat. So we can't stop the bus, but I do think we may have an opportunity to steer it. This may be controversial proposal, but something like taxing AI companies like us, we may need to get.
And that's a very interesting message coming from you, who runs an AI company.
That's kind of wild, right? I have never heard of a Sam Altman or even an Elon Musk or a Sundar saying, "Hey, you should theoretically think of taxing us even more than we're taxed right now as an AI company, like having an AI tax because of how dramatic the job losses are going to be." What my takeaway from this is invest in AI. That's it. Invest in AI. I mean, even if it gets to the point in this country, or even internationally, but most of the AI companies are in this country, so really in the United States, where we propose an AI tax in the next 5 to 10 years. That means the NVIDIAs, the Metas, the Amazons, the Googles, the OpenAIs, et cetera, the Teslas, they're going to have so many profits, so many opportunities to make profits, so much opportunity for market share that they would be able to consolidate in, because if you have traditional banks or traditional financial service firms that are going out of business because ChatGPT is becoming your new financial advisor, whatever it means, that we need to tax them, that means their share prices are going to be going up a lot. I mean, like, it's just like my takeaway from that is if you invest in AI to the point where AI taxes need to be introduced on these AI companies, then they're going to have so much excess capital that even with the AI tax, shareholders should do very well. Now, the question is going to be, how dramatic is this guy actually being, right? Like, is it really going to get to the point where we don't create new jobs because we're replacing so many, and the pace of growth of the creating of new jobs can't outgrow the pace of growth or the pace of degrowth for jobs that exist? Or is it going to be one of those things where it's like, yeah, AI is making everyone more productive, but that doesn't necessarily mean people are being fired left and right because of AI? And I guess in the next 5 years, we're going to find out. But I think that means invest in AI. Like, it's like if it really gets to the point where governments have to tax companies, and I think with the robots, like, there's an argument that if we replace 1 million people at Amazon with robots, those 1 million people, they're going to need some type of income. And maybe that income comes from some of that. Maybe the robots are going to generate so many profits for a Tesla that the US is going to have to go to Tesla and say, "Hey, dude, like, the fabric of society is not going to operate unless we're able to pay these people some money, and we need to take some of your robot profits." And maybe Tesla's like, "All right, do what you got to do." Tesla probably wouldn't love that, but they also would recognize, like, hey, people can't just not have money in a society or not have a chance to have any type of income. And maybe the UBI comes in. I mean, it's going to be a fascinating thing, and we're going to be living through it. All of us over the next decade are going to be living through this revolution, because the internet just created a lot more jobs. The internet, I don't think the internet necessarily took away jobs. The internet opened up massive, massive opportunities across every sector for new job creation. And a lot of that was solo entrepreneurs just starting their own businesses in using the distribution of the internet. But with AI, it definitely feels a little bit more like taking away the jobs that might not be needed. Learn how to program. Bots suck at programming. Well, yeah, the robots will probably suck at programming, but the LLMs are probably going to be incredible, at coding, better than the best level of engineers that we have on the planet. Brandon says, I don't think he's being dramatic enough. Think about the humanoids taking over the blue collar jobs. No, I think that's fair. I think what's going to matter, and Karp was talking about this in his latest talk. I think I mentioned this a couple of days ago in his talk with the Economic Club. He said, when we're looking for people to hire at Palantir, we're looking for creativity first and foremost. Like, we're not looking for what college you went to. We're not looking for how smart of an engineer you are. Like, obviously those things matter to them, but they're looking for, in an AI world where a lot of things are commoditized, how creative can you be? How autonomous can you be? Can you take risks? Can you attach your creativity to different ideas to actually, innovate in different hard problems that we have to solve for the government and for our commercial clients? And so I do think creativity will have a premium in the future, because it's the one thing that, at least so far, AI is not commoditizing. But who knows? Maybe AI may commoditize the entire nature of creativity in and of itself over the next 10 years as well. We do have some updates on oil. So oil prices are down today because OPEC is discussing raising oil production by more than 411,000 barrels per day. This is bad for oil companies. This is great for consumers. You can see right here, oil is down about 0.5% on the day. This is great for Trump too. It continues to get oil to come down. And so very nice to see OPEC say they want to keep producing oil. Again, not the best for the Chevrons or the Exxon Mobils, but great for consumers that want to have low gas prices. And it looks like if this continues into the summer, then we should continue to have, hopefully, on a national average, below $3 a gallon for gas. Sebastian says, I was diving into the financials of NVIDIA today, and holy, they might be the biggest company for decades as AI takes over the world. Yeah, I agree, dude. They did $27 billion in free cash flow. I mean, it's kind of insane, bro. Like, and that was 15 billion last year at this time. So it is pretty remarkable, this company's earnings. And like the street's not going to let it pump up to like 150, 160 anytime soon because of, you know, the market cap is just increasing a lot relative to the S&P. I think NVIDIA's got to move with the S&P over time. But it is just incredible, dude. It is just incredible. Speaking of NVIDIA, this is NVIDIA. This is Jensen with Kramer 2 days ago talking about the annual spend on AI CapEx by the end of the decade.
Yeah, we're going to need a lot more computing. And we're fairly sure now that the world's computing CapEx, it's on its way to $1 trillion annually by the end of the decade. So we're fairly certain of that. We're also very certain that the vast majority of that will be used for AI. And so our opportunity as a percentage of $1 trillion by the end of this decade is quite large. And so we've got a lot of infrastructure to build.
$1 trillion by the end of the decade, bro. Like the hyperscalers are already spending about 350 billion. So, you know, you get to $1 trillion by the end of the decade. That is a lot of that. Not all of that's going to NVIDIA, but a decent chunk of it is. And as a result, all the semis, the AMDs, the NVIDIAs, all those guys are going to benefit from us being able to do that. So it's going to be exciting, dude. It's going to be very, very exciting to see how this is playing out. Is SBET pumping in the pre-market? SharpLink Gaming? My goodness, dude. It's up another 35%. So again, this stock, I don't know what was the catalyst. It was like, what is this? $10 on May 5th, $4 on May 5th. It's now $108. This is kind of what Skrelly was talking about yesterday, right? This idea that we're in a post-money world. And I think this was the most fascinating part of the interview when I was listening back to it. Because again, he's been through a lot of different economic cycles. And his argument, which is that money is like not even real anymore to an extent. The fact that a fart coin could be worth as much as it's worth, or these quantum names can get to these tens of billions of dollars of valuation, or that a SharpLink Gaming can get to $108, or RGC can be worth $770 after being worth $5 in January. It's like, what is money in a world in which this can happen? And the core thesis of his argument right here was that attention is the new commodity. So Fartcoin down about 11% on the day, but that's a $1.12 billion market cap. The argument here is that there is attention on Fartcoin for whatever reason. I don't know where the attention came from. I don't know how the community started, but the point is there is attention on Fartcoin. And that is why it's worth $1 billion, because there's enough attention, which is the true commodity of our lifetimes. It is how much attention can you generate versus how much money can you generate, because money just becomes a byproduct of all that attention. And so same thing with the quantum stocks, right? They are getting a lot more attention because there are people in the world that believe that quantum is going to be the next big thing. And all that attention is what has created the momentum on these valuations. Same thing for a SharpLink Gaming. Even if it's just speculative attention, it is attention nonetheless. But we are seeing many, many examples throughout the market. Newsmax was one of them. Webull, when it pumped to 80. GameStop obviously been the poster child for this. Of attention being what leads to people buying into a thesis. And that thesis, as a result, is leading to some of these incredible valuations that we're seeing right now as well. To say money doesn't matter anymore is such a multimillionaire thing to say. No, I don't think he was saying it from a practical perspective. It was more philosophical about money doesn't matter. It was more so like, hey, what is money in a world in which a fart coin could be worth 1.3 billion? It's actually the same argument that the Bitcoin crypto people make, right? It's like money is just a vehicle to, at least in the from an investing perspective, to put a dollar amount on what something is valued at. But do any of us really think Fartcoin is worth $1 billion? No. Maybe some of you guys that are Fartcoin bulls can think that, but most of us don't think Fartcoin is worth $1 billion. So that's his argument. He's like, what is $1 billion if Fartcoin, something that obviously should not be worth $1 billion, is somehow worth $1 billion? Like, what is the whole point of money? What is the concept of money if something that we use on our day-to-day lives can then be applied to something that is as meaningless as Fartcoin to then derive $1 billion worth of meaning? I think that is the broader argument right there. And now, maybe the answer to that, it's a bubble. Maybe the answer to that is froth. Maybe the answer to that is that we've, lost purpose in society and people are fleeing to things that they think they can find value in. I think one of the answers to this question is that people missed out on major runs in the economy, major stocks, major private companies, and they're trying to chase alpha from wherever they can get it. And Farcoin may be one of those things that's easily enough for people to chase because they think they have access to it, even though it's intrinsically worthless. But it does beg the question, like, what type of society are we living in when things like that can be valued to that extent? My take here, though, is that that's not really negative. Like, that's part of the reason why Palantir gets a high valuation. It's part of the reason why Tesla gets to be worth $1 trillion, even though they're declining 20% year over year in terms of top line sales. Like, one of the reasons these valuations occur is because people have such belief in the underlying, and that belief creates a community, and that community, again, attention becomes the asset of that community, and that's what leads to then other people buying into these names and creating wealth for a lot of people that bought into a Palantir at $6 or a Tesla at $20 or whatever it may be. Now, the only difference here is that Palantir and Tesla are real companies. You can say they're overvalued, expensive, whatever, but they are real companies. The fart coins of the world are nothing. The NFTs of the world are nothing. And I think that's the broader point about, where speculation in the market is going across these assets that just, don't really have that much relevancy. All right, we got 2 minutes until the market opens. 2 minutes until the markets open. I think today's going to be a relatively flat day. Yesterday was a flat day. I don't think there's anything too crazy going on. Yesterday was pretty damn flat. NVIDIA was at like 142, and then NVIDIA came back down to like 139. Now it's NVIDIA's at 138 based on that China headline. PCE was really good. We do get Michigan consumer sentiment at 10 a.m. I hope they surveyed more than 200 people. I don't think they really did. So I think we'll have to take that with a grain of salt when it comes out in about 30 minutes. But besides that, we got PCE. Oh, we have PMI at 9:45. So we'll see what the PMI looks like. PCE was great. The China tweet kind of rattled markets. And then we'll ultimately see what happens with the Michigan consumer survey in about 30. All right, here we go. It is 9:30 a.m. Thank you, everybody, for being here. The stock market on the last trading day of May is now open. All right, wake your ass up. Let's get into it. NVIDIA, 138.84. 138.84. NVIDIA opens up red, down about 0.21% on the day. Let's see if we can crack back above 140. Tessie, 355. That is red, down about 1%. Hood, 63.96. That goes slightly green, basically flat on the day, but that one also not moving too much. Palantir, wow. 2% on Palantir. Interesting. Palantir is the only one that's getting a 2% move. Why is Palantir getting a 2% move today? Interesting. I guess the New York Times hit piece got people more excited to buy Palantir. We'll go back to that in a second, but Palantir up 1.9%. PayPal, that's flat. SoFi, 13.19. That's slightly green. Google's $1 away from going below 170. So let's see if Google can hold that 170 level. Amazon, 204. Meta's at 639. Salesforce is at 269. That's up about 1%. Elf, 114. That's up another 2% after being up 20% yesterday. Enphase right here down about 2%. MicroStrategy, 368. That's down 0.65%. Grab, 489. That's basically flat on the day. Apple, 198. That's down 1%. Coinbase, 246. Down 0.5%. Bitcoin was at 112 on Monday. It's at 105. So Bitcoin definitely saw a little bit of weakness this week, but still holding over 100, which is nice. Rocket Lab got to 30, back down to 27, 26.96, down about 1.42%. HIMS beginning to consolidate in the 50s, I would say. I mean, it hasn't gone below 50 yet. Hasn't got back to the 60s since last week, but HIMS right here. Let's see if we do get a $50 consolidation. S&P down about 0.33% on the day. Alibaba slightly flat as well. Where is our CoreWeave? By the way, Dell had some crazy earnings yesterday. CoreWeave is up about 2%. Dell should be up like 15%. Dell is up 1.2%. Dell increased their guidance to $29 billion for Q2. The street was expecting $25 billion. They increased guidance by $4 billion. I do not know how this stock is not up 15%. I didn't look into their call. I'm sure something about their margins was a little off or whatever. But I mean, dude, the amount of AI momentum that they're seeing. This is what Michael Dell posted this morning. In Q1, we received 12.1 billion in AI orders, surpassing the total shipments for all of 2025 and leaving us with a backlog of 14.4 billion. That's probably why they also raised their guidance by $4 billion, not per year, but for Q2. So it's not just a 4 billion increase for the year. It's a 4 billion increase for just the next quarter. I feel like the stock should be up a lot more. But nonetheless, right here, it's up about 2.3%. Robinhood goes green. That's up about 0.5%. Tessie, that's down 0.5%. Nvidia's trying to go green, 138.85. And then Palantir, 124.37. That's up 1.3% right now. Where is good old Intel? 1999, that's down 1.2%. Intel really has been flat for the past year and a half at this point. Remember that guy on Wall Street Bets who took his grandmother's inheritance of about $800,000 and he bought Intel at $30? And then a week later, Intel crashed to like 19. I don't know if he's still holding on to it, but if he sold covered calls against it, he probably would have been able to generate income because Intel's been flat over the past year. He would have had to sell covered calls below his average, which would have been a little scary. But nonetheless, Intel right here, $20, that's down about 1.16%. Where is AMD? AMD is down 1.6. That's down as well. Unity, so that one had a big move. We don't know why. Jason called this one out back on Tuesday, and then Wednesday it popped like 15%. Don't know why exactly it moved, but it did move. Unity right here, wow, 7.7% of the day. So you see right there, it was at 21, popped to 25. Now it's back up from 23 to 25.60, which is nice to see right here on Unity. Path also had a good earnings. They're up 14%, or sorry, they're up 7%. They're at $14. But decent earnings for Path. Robinhood 64.55, holding that 64 range, and then Google back up to 171, maybe 170, starting to become a little bit of support for Google. SBIT, SharpLink Gaming, this thing is up another 40%. Again, if you're chasing it, you're chasing it, but this one is a little risky given it was at $5. Now it's at $112. But that one is also very green. Where's the dollar index? The dollar is 99.55, so that one's relatively flat. And then the 10-year, I think, is also slightly down on the day, 4.424. Yeah, that one is basically flat as well. There is no Robinhood keynote today. The Robinhood keynote is at June 30th. So I'll stream it on June 30th, but not today. But they did announce their keynote is happening June 30th for their crypto event. Robinhood right here, 64.22. Nvidia, 138.10. Currently right now. ELF, is ELF moving? Are we getting a little move on ELF? ELF is up about 3%. It was up 20% yesterday. Nothing crazy there. What about Estee Lauder? Let's see that one. That one's flat. Again, we don't even know if Burry still has his shares, but he did have a 200,000 share position. And then Ulta had a good earnings as well. Ulta right. Wow, Ulta 13%. Holy crap, dude. I mean, it was a good earnings. I don't know if it was that good of an earnings, but Ulta's not a company that moves 14, 15%. And right now it's here, 14.4%. Currently right now. And Zscaler. Yeah, Zscaler also had a good earnings. Again, dude, we looked at the earnings growth in aggregate yesterday, 13% in the S&P 500. The market wanted 11%. We are growing, it's 13.4. We are growing 2.4% more than what the market thought we would be growing, which is phenomenal. Like that is like, those are big numbers. And if we can keep that up in Q2, which is going to be hard because of the tariffs, but if we can keep it up, we're not going back to 4,800 on the S&P. I mean, if anything, we're going to 6,500 sooner than later if we can keep up that earnings growth. But we just got to see if, if there's a shot for that. I'd forgive Estee Lauder if you pronounce etc. correctly. It's etc., right? That's how you say it, etc. Am I saying etc. incorrectly? It's etc. It's like, that's how you say it, right? It's etc. There can't be a different way to say etc. There's no way I'm saying etc. wrong, bro. You guys are freaking trolling. It's freaking, it's like, it's etc. What do you, ET, not EX? Oh, it's etc. Wait, there's a T in this shit? You've said it wrong for years? Why are you guys telling me now? Why didn't you tell me years ago? Hold on. We're going to use freaking Google propaganda machine and see what they say. What is, okay, all right. Oh, wait, hold on. Wait, I think I'm going to be wrong on this. Hold on.
Etc.
Oh, shit. Well, you know what? Sometimes, is it really?
Etc.
So what? I've been saying etc. I've been saying EX. Well, I mean, I think that, Dude, why am I like this? Why can't I speak? Why can't I say words? It's so weird. So freaking weird. I'm just gonna keep saying etc. because that's what it sounds like. It doesn't sound like etc. Where what are we talking about? It sounds like etc. I've been saying this wrong for years, bro. How did no one tell me this? You say it the New Jersey way. Dude, yesterday I was at the gym and I was walking out of the gym and it, like, it was the most Jersey thing ever that happened. This guy rolled down his window to tell the other guy to F you and blah, blah, because I think he walked in the middle when the guy was trying to, like, it was such a Jersey exchange. Like, the car was trying to go through, the guy started walking. Instead of the car stopping, the car went up. So then both of them paused at the same time. Then he rolled down the window and he said, screw you, blah, 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 blah. And then he said, that's what your mother said last night. I was like, this is the most Jersey thing that's happening in front of me right now. Literally the most Jersey thing that's happening. And I was like, guys, we're at the parking lot of the gym. Like, why is this so aggressive right now? But that's Jersey for you, bro. That's literally Jersey. Also, people drive bad in Jersey, so that's probably why the guy didn't stop when the other guy was walking. But still, Marvell, are we down 7% on Marvell? We're down 7% on Marvell. So Marvell, their guidance is what is the issue. Their fiscal year guidance is what's getting the street a little upset right here. Although their AI revenues are up like 3x year over year, so from an AI perspective, they're doing very well. But those fiscal year revenues is, I think, what's getting the street a little upset right now. And that's why we're seeing some of this pain. They also delayed their investor day, but that was, a couple weeks ago. That news is not helping the stock. I don't know if it's opportunity. I mean, I would have to go deep into their financials and see what's going on with Marvell. Micron right here at 90.49 as well. If NVIDIA is doing well, I would imagine all the semis eventually follow, and maybe these are short-term reactions. But that is weird that if Dell can increase their guidance by $4 billion and Dell is barely up 90 cents today, if Marvell reduced any of their guidance yet, like, it makes sense that the semiconductor algos or whatever is trading these names would take it back further down. Because if Dell can't get a pop on a $4 billion increase in guidance, then Marvell's not going to get any love if they decrease guidance somehow. Rocket Lab right here is also down. NVIDIA 137. NVIDIA now down 1%. Rocket Lab is down 2.6% on the day. It's really etc., huh? I thought it was etc. Where did I get the EX from? Because when you type it, it's ETC, right? So I should have known there was a T in it. I'm like surprised there's a T in this damn thing. But like if you write etc., like on a I'm saying it wrong right here. You do ETC and then you do a dot and a comma, so you don't do EXC. But I don't know why I assume there's an X in it. Ty says I say it like that too. Amit, don't worry. Okay, thank you, Ty. Let's see if someone on my side. Amit, are you buying more TLT? So I haven't pulled the trigger on this thing yet. I have some TLT. I do feel like this is obvious, bro. I just feel like rates are going to come down. So I haven't really bought more yet, but I don't think it's the worst play. I really don't. Now, granted, when Trump tweets this stuff about China, it definitely doesn't help the idea of rates coming down. But yeah, I think TLT will be okay. I think what I would do is either buy the stock or I'd buy the 2027 leaps. 2026 may be too early, but I think 2027 $100 is not crazy. And I really want to do a spread between like 95 and 100. That would be a little bit easier. But the stock itself also is, if you're looking for some upside to that 100, 110 bucks, maybe it's not the craziest idea here. Costco, are we pumping? Costco also had a good earnings yesterday. They beat on the top and the bottom. There you go. Costco 3%. Costco doesn't move as aggressively. So 3% is a nice move on Costco. This damn thing will not split their stock, which is one thing that people have been annoyed by, but also they are going to continue trading at 60 times earnings because they're Costco. And as long as they keep beating on earnings and growing 8% year over year, the market will be happy with them. Is that biotech still mooning? Yup, here you go. RGC, Regencell Bioscience, is now up another 28%. It is at $910. You can't even buy puts on this thing. There's no options chain. So it was $5 in January. It's $950 today. I don't have any idea what these guys do. Who the hell's buying it at $950? I have no idea. But it was up 40% yesterday, and it's up another 30% today, which is incredible. Amit, are you playing with the event contracts on Robinhood? I haven't really dabbled into them. I don't care that much about like betting on sports, so I haven't done it. But Jason, dude, he's been absolute degenerate. He's been doing like $10,000, $20,000 bets on the NBA stuff, and he's been winning a lot of them. He's been doing very well. So yeah, I don't really use the event contracts, but I know a lot of people that that are enjoying it. SoFi right here, 1307, NVIDIA 137.13, Robinhood 63.96. Where's Grab? Are we still down on Grab? We are down 0.5%. Again, I will say this over and over. This is one you just got to be patient with. There's a lot of catalysts lining up for them, but it's going to take some time for this one to play out. The consolidation has been incredible, and I think the breakout will be even stronger. Howard Marks buying in, Ray Dalio. I mean, there's just a lot of clues here, but I think the street is waiting on the acquisition. And so until we get news about the acquisition, Grab is going to be relatively flat, which means it's an accumulation phase to me. And eventually that acquisition hopefully helps it out. But by the end of Q2, so closing in on like the end of June, July, I think we'll have a better understanding of what's going on. One thing about Grab that's been interesting is that there hasn't been any insider selling for like a couple months. And usually the insiders, they tend to sell every other month. And we haven't seen any. I think the last one we saw was like 15,000 shares. So there's not much to read into it, but it's one of those things where it's like, hey, if they're not doing their usually scheduled sales, I think they feel the stock is going to be a lot higher by the end of the year. And they don't want to sell at $4 if they know they're acquiring their biggest competitor, and they could sell it for $7 later to the end of the year. Are you buying more Grab? No, because I have my position. It's a 6-figure position. I have plenty of Grab. My average is like 450. So to me at this point, I'm not really buying more. SBE halted down. Did it get halted down? SharpLink. It is still up 31%. It was up a little bit more. It was up like 45. Yeah, it's halted. Robinhood's not showing it here, but it is halted. Halted at 103.83. 103.83. It is. I still don't even know, what did SharpLink Gaming say that got the market so excited? Like what did they like? Did they introduce some new game or something? Some new AI game, or like? I have no idea why that happened. Amit, since I started listening to you, I'm selling covered calls and making an extra 2 to 3% a month. It means a lot. Thank you. That's awesome, dude. That's like, I think this is a covered call market. I mean, dude, think about if you had covered calls on NVIDIA or Hood or Palantir this week. All of them just printing money, because the gamblers thought NVIDIA would go to 150, 160, 145 even. People thought Hood would be at 70 this week. It's like, no, dude, a lot of these stocks are not at all-time highs, but they're at 52-week highs. And that's the best time to write covered calls, because if they're not going to keep making new 52-week highs, it's literally like selling crack to a crack addict. And, you think Hood's going to go to 70? Okay, here you go. Because if you know Hood pretty well enough, or NVIDIA pretty well enough, like these stocks are just not going to keep making all-time highs or 52-week highs every other week. And if they do, it's not like they're going to stay there unless they're just like catapulting up, which means you can easily roll out of the position. So I really do think this is a great covered call market. And maybe 2026 is going to be different, but 2025 is pretty incredible. All right, PMI. We just got PMI. Here we go. PMI. What do we have on PMI? We've got PMI coming in at 40.5 versus 45. Okay, so that's a miss. 40.5 versus 45. We get Michigan consumer sentiment in 15 minutes. 40.5. Okay, so that's bad. Is the market really reacting to that? Let's see how much the market cares. Market, no, not really. We were already down 0.3%. Doesn't look like the market cared that much. Marvell now down about 8%. Yeah, that one's, look, it's not good. But again, a lot of this also conflicts with other types of PMI, like services PMI we got last week that was really good. So it's one of those things where you kind of have to just take it with a grain of salt and then ultimately see how much the market is reacting to it. But that is a bit of a miss. 45 is what the market wanted. We came in at 40.5. So it's bad, but not sure how much credibility it's going to have on the broader markets. S&P, it was down 0.3. Now it's down 0.4. Not really any meaningful change right there. NVIDIA is falling, though. That one is getting NVIDIA. 1.9. If NVIDIA gets back below 130, I think it's a pretty obvious buy the dip. I would be pretty surprised if we get there. Like into that 125 range, but I would definitely not mind buying that dip right there. Tesla right here at 357, and then Palantir still holding 124.29. Yeah, we have a lot of options expiring today. That's a good point. It is Friday, May 30th. So there's a ton of OPEX today. And that could also be creating volatility throughout the entire day. Let's see. What else do we have? Again, we have that Trump press conference at 1:30 with Elon. So we're going to see what happens there. That one going to be very interesting to see how Elon navigates this. I also wonder how Tesla stock reacts to that as well. Tesla right here. Where is Tesla? Tesla's at 357. We had a bunch of headlines this week on Tesla with European sales, China registrations, all that stuff. The biggest thing was Elon just tweeting about how he's done with Doge. And so, I mean, look, dude, I don't know if Tesla runs to 400, but if it consolidates between 330 and 360 or 370, I don't think any Tesla shareholders would be that upset right here. 357. We looked up the average change in June in the stock market since 1950, and it's plus 0.1%. So theoretically, if we have a good June, if we have a great June, we're going to be a lot higher. If we have a good June, then we should, be flat for the month of June. And I think that's nice consolidation. I think that's not taking away any of the gains, especially because people are up a lot. And, that wouldn't be the worst thing. But let's put our year-to-dates in the chat. We haven't done year-to-dates in a while. My year-to-date is 28.9%. 28.9. So this is our first year-to-dates after, obviously if NVIDIA was a little bit higher, it would be more, but NVIDIA's back to where it was before earnings. But I think most people are comfortably in that 20% range year-to-date, which is, solid, right? It's pretty freaking solid. Austin says, I am now 37% concentrated to Google. Well, you are putting your money where your mouth is. Goog's right here. 170.7 currently right now. AMD and TSM are also down 2%. Yeah, both of them falling with NVIDIA. We'll see that Michigan consumer sentiment at 10 a.m., see if that has any impact, but both these stocks are down. Andy's up 46%. Heavy's up 28%. Ricardo's up 30. Angel's up 19.6. Oleg's up 25. Tom is flat year to date. DJ's up 4. Anand is up 31. Tired Gang up 18. Christina's up 6. Elaine's up 55. Pretty much everyone's green, bro. Pretty much everyone's green. Tess is up 138. Nick's up 62. Leo's up 34. Yeah, dude, I'm not seeing any negatives. If I'm seeing negatives, it's like negative 0.4% or something. Everyone's green. Everyone is pretty much green. Drew's down negative 2.5 because he's heavy in Tesla, but at least it's only negative 2, right? Given how much Tesla's recovered. It's not bad, bro. It's not bad. The S&P is flat year to date. So if you that's our benchmark, right? That is everyone's benchmark. Whether you're a hedge fund, a money manager, or a retail investor, your benchmark is, hey, can I beat the index that controls the 500 best companies in the United States? S&P 500 right here, down 0.49%. And everyone in the chat is clearly beating the S&P right here, which is nice to see. Okay, so here's a better question. What is your best performing stock this year? What is the stock that you are up the most on this year? Best performing. I think I'm about to see a lot of hymns. Definitely going to see a lot of hymns. But yeah, look at that. Hymns. Dude, I wish I got into hymns early because then I would be like this big hymns bull and we could just be like celebrating hymns every day. But none of you guys told me about it. And so what am I supposed to do? I wasn't supposed to just discover this. You guys were supposed to help me out. Could have been writing hymns together. CoreWeave? Wow. Okay, so we got some CoreWeaves. We got some Amazons. That's not bad. We got a bunch of hoods, obviously. Hoods up like 70% year to date. Incredible. Oklows makes sense. UNH, if you bought at the lows, I could believe that as well. Palantir, obviously, great year as well, especially if you got in at the lows in April. MicroStrategy. How much is MicroStrategy up year to date? It's up like 30%, right? MicroStrategy year to date, yeah, 22%. It was up more a week ago. That's up 22%. Oklo, Hood, Amazon, Palantir, Spotify, great year for Spotify. Transmedics, they had a great earnings. Netflix, just been incredibly resilient all year, bro. It's one of those stocks you can own for a long time and not worry. TSLL, that one's also done very, very well. I agree. That's really because Tesla's moved on. Duolingo, how much is that one up year to date? Duolingo stock, it's up like 20%, right? No, my bad, 53%. Duolingo, again, a contrary play around learning languages. A lot of people thought AI would bankrupt them or something because ChatGPT helps you like learn another language, but I think they kind of, dismissed Duolingo's broader moat around user experience. NVIDIA right here down about 2.3%. So NVIDIA Definitely getting hit right here. Is there any other news? Let me see. We're going to get consumer sentiment in 8 minutes. Let's see if there's anything else that's coming out when it comes to news. U.S. cancels 24 projects related to clean energy. Okay. France's Macron says there is a big risk of nuclear proliferation. Okay. Bro, I found out something 3 days ago, and I couldn't believe it, bro. I really couldn't believe it. And for all my French people in the chat, I don't know how you guys feel about this, but I really couldn't believe it. I did not know that Macron was married to a woman who's 75 and he's like 47. I did not know that. But usually it's the guy who's older than the girl, but she's older than him. And the weirdest part about this is that they met when she was his teacher when he was like 12 and she was 40. And apparently France has some different laws around consent and all this stuff. But I was watching a video on it the other day because remember that video that went viral of like him getting slapped in the face by his wife or something? So I just Googled. I was like, see, this is why Google has a moat, because I went to Google. I Googled and I was like, you know, what is this guy like? Who is his wife? I never saw the French, the guy's wife. And yeah, apparently it's someone, she had a husband and kids. There was a big controversy because she was spending too much time with this like 15-year-old in high school. She was his like English playwright teacher. And then she divorces the husband and kids. And when he's 29, he marries her and she's like 53. And now he's 47 and she's 75. I didn't expect that, bro. I had no idea. I had no clue that was, you know, that was this guy's personal life. So, okay. Everyone is saying in the chat, that's a man. I don't know about that. I can't speculate from that, but I was just shocked, bro. Usually you do not see a guy who's married to someone 30 years older than that. It tends to be the opposite. So I'm not judging. I'm just saying it was a little, I didn't expect it. 10-year, by the way, 4.42. That's down right now. Did you guys know that though? Like I found that out for the first time, bro. Because he got smacked in the face coming off the airplane. And I was just like, all right, who is his wife? This was the video right here. This was on Memorial Day. You see this? So they caught it. They caught that. And then I think he just dismissed it or something. Maybe this was like a loving gesture or something. I don't know. But it just made me curious. I was like, all right, who is he married to? Who's slapping him in the face? And I'm like, oh, she's a little bit older than him. So yeah, I did find that out over the week. Robin right here, 6320. We're going to get this consumer data in 4 minutes. And we're going to see what this looks like and if it's having any impact on the market. There's whole documentaries on the relationship. See, I haven't gone that far, bro. I watched one video on YouTube. I didn't really care that much, but I just did not like. I don't know, bro. In the United States, if we had a president who was married to a woman 30 years older than him, I just wonder how the population would think of that. You know, some of those optics do matter, right? Like it's just in the minds of consumers, which at the end of the day, you know, they're voting for the president. And we've never seen something like that, at least in the United States. Tesla, by the way, is down 1%. NVIDIA keeps falling, bro. NVIDIA's got the biggest red candle right here. NVIDIA freaking 2.3%. Market's completely discounting that entire earnings. It's back to where it was right before the earnings came out. And that one's getting hit right here. Isn't Levitt married to someone like 30 years older? Yes, but she's the press secretary. She's not the president. But yeah, she is. But again, that's what I'm saying. It tends to be the girl, and then the guy tends to be older. This one, you know, you don't tend to see many guys in a relationship with girls that are that much older than them. Why is NVIDIA down 2.3%? I don't know. Like what? I don't see. I feel like these are algos, bro. There's no headlines today to get NVIDIA down. SBIT, by the way, holy crap, it's down to 88. It was just at 103. So that one, it got unhalted, and then it tanked to 88, and now it's halted again at 88.27 or 88.77. So that one is red. Is Steve going to be on the show today? Yes. Steve's going to be on at market close, and we're going to be talking about his yield max thesis, which, quite frankly, I spent like 20 minutes yesterday rambling about it on the market close, but I agree with it. I think these yield max ETFs are actually really sophisticated and smart ways to generate income. Now, there has to be a way you time your entry into them, but all they are covered call writing ETFs. That's all they are. They're not really like scammy. I used to think they were scammy, and when I read through the prospectus 2 days ago, I was like, this is not a scam. This is just a really smart way to generate income. So yeah, we'll talk more about that later today on the market close. Salesforce right here down about 0.5%, Meta down about 0.47%, and then Tessie still down about 1%. Yeah, I'll ask Steve about. Steve just put out an article about Salesforce on Seeking Alpha, so he's obviously bullish on Salesforce. The market is not caring as much about Salesforce, given the earnings were kind of flat. Revenue growth of 8%, acquiring a company for $8 billion. Like, there's nothing to get that excited for when it comes to Salesforce. Also, Mark Benioff followed Palantir yesterday on Twitter. Don't know why, but who knows? Maybe there's something coming up with Benioff and Palantir, or Salesforce and Palantir. But he did follow Palantir yesterday. But yeah, he wrote an article about Salesforce, so we'll talk about their earnings later today as well. Give an example of the yield max ETF. We'll talk about it today, because if I start talking about it, I'm going to, like yesterday, I spent like almost 30 minutes just talking about it. Because I read up a lot on it 2 days ago, dude. Like, I really want, like, I was on the phone with Steve for 3 hours because I was trying to be convinced it's not a scam, that there's no red flags. And there really aren't. I mean, again, you have to understand NAV erosion. You have to understand how you're investing. You have to understand timing. And we'll talk all about that today. But they're not doing anything that complicated. All they're doing is going synthetically long on MicroStrategy instead of buying MicroStrategy shares. And then they're writing calls and raking in premiums from those covered calls on their synthetic long, which means they're buying a call, selling a put to be able to create that synthetic long. And then they're paying you a distribution. That's it. So it's just it's like me doing, I could do what they're doing by myself. It just takes more work. So now you have to understand like why and how and where the distributions are coming from and how does it go down? If the stock goes down, what happens to the underlying, all that stuff. But those are risks with any investment, right? Is it an actual like legit scam? Like, hey, if you invest, they're promising you, it's like staking back in like FTX was promising you like a 15% yield if you stake your money. Like, that stuff is scammy. This stuff is just underlying assets. They're using the derivatives market to generate yield. And if the stock stays flat, the underlying stays flat, they can generate more yield. That's it. So we'll go deep in depth into it today, but it's a smart idea, dude. I wish I came up with the idea. Like, they have 12 billion in assets for a reason. Like, it's a very smart way to just generate income for people, especially if those people don't want to actually do the work of writing their own covered calls. Talk about Andrew and Mark Zucks. That's a good point. We will talk about that in a second. Let's get Michigan consumer sentiment. Should be coming out right now. And then we'll talk about what happened with Andrew and Zucks yesterday. Let's see if we have the numbers. Consumer sentiment. Do we have it? Okay. 52.2. 52.2 on the consumer sentiment. 52.2. That is good. That's better than expected, right? Is that better than expected? I think that is. 52.2. Market wanted 51. Yeah. So it's better than expected. Let's see if I can get some coverage on this right here, but I think that's what we got.
With how the Chinese government is responding. Plus, Liz Ann Saunders of Charles Schwab is here with her playbook amid all the tariff uncertainty and the key economic report she says she'll be watching next week.
Let's get some consumer data to finish up the week with Rick Santelli. Hey, Rick.
Yes, University of Michigan sentiment, Carl. These are our final May read, which means we'll take our mid-month and toss it. They are all sequentially higher and better than expected. Headline moves from 50.8 to 52.2. 52.2, that would be the best since March of this year. April equaled 52.2. 58.9 on current conditions, up from 57.6. 58.9, best since April. If we look at expectations, what lies ahead? 47.9 in the rearview mirror, 46.5. It is below 50, though, and 47.9. Well, consider this. We haven't been above 50 since March of this year. So 47.9 would be the second worst going back 2 months. Finally, the inflation numbers, probably the most important data here. A big reversal, but still lofty levels. 7.3 was our mid-month for 1 year. That was the highest going back to 1981. It moves to 6.6, which, of course, would be the highest since 1981 as well. 4.6 on the 5 to 10 year moves down to 4.2. 4.2, well, that would be the hottest going back to March when it was 4.1. The 4.6 that we tossed out, that was the highest since Sep of 1990. We see interest rates moving a smidge lower on that data, but not a lot. And do remember that on surveys, they're a bit squishy, so these numbers may be a bit exaggerated. I would expect them to start coming down over the next several months. Sarah, back to you.
Okay, Rick.
All right. So consumer sentiment, not bad. They didn't talk. I don't think this one gave inflation expectations. This was just more of a general aggregate of consumer sentiment. Michigan data coming in better than expected. 588 on the S&P. It was down about 0.5%. Now it's down 0.35. So we did get a nice green candle up from 0.5 to 0.3, but not sure how much the market is actually going to care about this data going forward. They didn't disclose the amount of people surveyed or anything like that. And again, this was not the same type of survey they did last week around inflation expectations. So you don't have people saying inflation is going to be at 7% or anything. But on an aggregate read, if the market's reacting to it, the market is not that upset about this. Palantir right here, 123.9, Tesla 357, and then Robinhood 63.73. Nvidia was down 2.4, now it's down 1.87, but still slightly down on the day.
Thank you. University of Michigan saying, at least we ended 4 consecutive months of plunging declines in consumer sentiment. And actually, that sentiment picked up following the temporary pause on some tariffs on Chinese goods. So continue to see these mood swings from.
Oh, I think they did give inflation expectations on this one. Okay, Rick just didn't say it, but it looks like based on what I'm seeing right here, 6.6% versus 7.3. Okay, so that's actually another reason why the market likes it, because inflation expectations are going down from 7.3. 6.6 is still freaking stupid. Like, I don't think inflation is going to be at 6.6% next year. I hope not. But that is down from 7.3, which is good, even if it's only 200 people that were surveyed. So maybe that's why the market's liking it as well. That's probably also why we got the headline beat at 52.2 versus 51.5.
From the consumer. We got the big inflation report this morning. This is the Fed's preferred measure of PCE prices. And the good news is 2.1% was the number. We're getting awfully close to the Fed's 2% preferred target. That was better than 2.3% the month before. And if you look on a monthly basis, it was only an increase of 0.1%. So it was as expected. David, we knew that we weren't going to get a surge of inflation because we saw CPI for the month. Either companies have built up enough inventories where they don't have to pass on the higher prices yet. They're absorbing it in their own margins. Whatever it is, we're just not seeing a big increase yet in prices. That's, in the Trump v. Powell
question, of course, and we don't know the answer. I mean, will it be sustained? Will companies continue to eat a lot of the tariffs, so to speak? Is that really a possibility, or do we expect at some point to start to see market increase in prices?
Oh, and do the companies feel that they have the pricing power to increase prices in a soft consumer environment? You can't just do that and then demand falls off a cliff. For instance, we also got personal spending numbers adjusted for inflation, and they were weak. We got higher incomes, which is good. People getting paid more, but that doesn't help growth unless they spend it. So the income number was a nice jump up, 0.8%. And yes, higher Social Security payments were part of that, but overall incomes are growing. Good news for Americans. Spending was a little bit softer. And in fact, it was.
That's kind of good though, right? That means people are not spending as much money. They're saving more, not spending as much. This should be good for less demand, which should be good for decreasing inflation. And from a financial literacy perspective, it should be good for people having more savings, right? To be able to use that money however they may need versus just spending it into the economy, which again, we kind of need demand to go down at least a little bit to get the Fed to lighten up on inflation. But the fact that people are earning about 1% more or saving about 1% more, that's a good thing. That's not a bad thing. And I think hopefully Jay Powell sees that as a reason to potentially get closer to cutting rates.
The softest we've seen in several quarters. Why? Well, they're saving more. Look at the savings rate, jumped up to 4.9%. That is often a sign that consumers are cautious. It's a warning sign. It also jives with some of the sentiment surveys we've been talking about, where there's uncertainty and people are nervous. And They may not be, pulling back in a very dramatic way on spending yet, but there's softness there and they're saving. And so that's, something that the Fed is going to be paying attention to. If I got these numbers at the Fed, I would say, okay, don't have to be as worried about inflation. Do have to be a little more cautious on the economy. Maybe we can move toward cutting. Then again, this Fed is really worried that inflation is going to flare back up in a few months because of tariffs. So they're on pause.
Yeah. So what does Powell actually tell Trump when they meet yesterday?
That he's data dependent, right? That he's just going to look to the data and decide policy based on where the data is directing them, that it's not going to.
If the data is saying that people are earning more, saving more, spending less, that means it's time for a rate cut. And eventually we'll see that in the numbers. But that is not a bad thing at all. Like the lack of consumer spending is a really good thing if we want to get inflation down. And it's also a really good thing because people might have to, for example, pay their student loans, pay their auto loans, right? Like pay their credit card bills. Like that is a good thing if people are paying off those things versus just spending in the economy.
Could be political. And what does Trump tell Powell? He said it very publicly.
We need rates down.
We want rates down. I mean, the government, they do need rates down, right? Because interest costs are very high.
We all could use rates to come down as citizens,
deficit.
Given we're spending $1 trillion in interest. Yes, that would be helpful.
But you asked a key question about what happens next. Like, do companies actually pass it on? Are we going to see inflation? Best chart of the day goes to Joe Brusuela's corporate profit margins. Here's what it looks like, okay? They're high, 13% corporate profit margins. There is room to absorb the tariffs. And this is something the Trump administration can point to next time Walmart or someone says, we're gonna raise prices on consumers. You guys have room. Now, Joe Brusuela says this, companies will want to protect their margins. So at some point they will be passing it on to the consumer. But just here's the backdrop. It's not like we're coming from a weak place for corporate America to be able to absorb some of it.
As AI starts to work its way into the operations of so many different companies, potentially introducing efficiencies as well, you might expect margins could go up,
even higher,
perhaps giving these companies a little bit even more leeway to not raise price. Again, that's all conjecture.
And then you have to worry about unemployment.
And then you have to worry about unemployment.
Yeah.
Because
if they cut,
there will be a lot of job. I asked that question the other day. Yeah, I forget who it was,
but nobody really knows, right?
Oh, of Jeremy Siegel. Because he was talking about the enormous efficiency coming from AI, but on the same time, what is that efficiency a result of? It's probably a result of cutting jobs to a certain extent.
Right, which would bode for lower interest rates from the Federal Reserve.
Yes.
Make things easier if people are unemployed. We just haven't seen evidence of that yet, so it's hard for them to move in anticipation of any of this.
Does Powell have a view on AI and what it's going to mean?
He really hasn't been that vocal.
Newsmax is down 18%, folks. Don't know why that one's getting hit, but it is getting hit today. So I didn't even know Newsmax was up at $18, but there you go. That one is down 18% on the day. What about Webull? These were the two biggest ones to go public this year. That one is also down 3%. We haven't had another company really go public that's big, like a Discord or a Klarna or a Stripe or anything. We've had a lot of these little companies like Webull and Newsmax. We do have Circle coming up. A lot of you guys have asked me about my thoughts on Circle. I know it's about stablecoins. I don't know enough about them, so I've got to do some research. I know Robinhood is offering the IPO. I do think in a crypto bull market, Circle can do very well. I just don't know enough about their financials or even really what products they offer to say if it's an exciting IPO yet. But it is one of the biggest companies in the stablecoin world. So I know that's one that people are thinking about. Also, yeah, we did have CoreWeave. That was probably the biggest IPO out of everything, to be honest. CoreWeave up about 1.3% on the day. eToro, I forgot about that one. Where are they? They are down 3% on the day. They had a successful IPO, though. I think they IPO'd at 49 or 45. So not like the IPO did too bad. But the big ones, they just still have not gone public yet. Newsmax was at 300 at one point. Oh, Newsmax, they made an offering? Really? They did an offering? Dude. They just went public. Why are they? If they actually diluted after just going public, the whole point of going public was to raise money. I really hope they didn't freaking dilute after going public. That would be insane. Volume is very low today. Yes, 100%. Okay, let's talk about Anduril. So Anduril and Zucks. So this was big news yesterday. Remember, Zuckerberg fired Palmer Luckey back in 2016 after supporting Trump. Okay. And now he is teaming up with Palmer Luckey to work with him on defense. So they are teaming up together to collaborate on AR, VR systems for the U.S. military. Remember, Meta bought Palmer's company, Oculus, for $2 billion. Palmer then was working at Meta. He supported Trump. Meta fired him. And now they're going to be leveraging Meta's massive investments in XR technology for our troops that will save countless lives and dollars. So Meta, which has always been just an advertising business, has officially gotten into, by the way, Tesla going green right here. Tesla 359, that's green. They are going into the defense business. And I think it makes sense because Meta really hasn't had a use case for VR outside of video games. And so they needed something. And that use case just so now happens to be VR AR for the military, which seems to have, a better use case than a lot of the other applications that they've been going for, which is pretty much gaming. So, I think it's a good deal. I think it makes sense. It is a little controversial. A lot of people don't really want Meta to be involved in the U.S. military, but it looks like this is Zuck's next vector of growth. Zuck has also had a kind of total rebrand on his personality. It seems kind of obvious he's voted for Trump and he's like embracing the Republican Party and sort of the right wing based on being a, one could argue, heavy Democrat back in 2016. And maybe he thinks it's cool to support the military right now. Palantir getting some momentum, up 3.2. NVIDIA back to 137. Tessie almost 360. We are getting some green candles across the board. S&P is, look at the S&P. The S&P. Dude, if we break even and go green on the day, that would be fun, bro. Even after that Trump China tweet, that would be fun. And it would be really cool to see if we can hold on to that momentum still. That just means everything about this market is so unbelievably resilient. It's one of those things where it's just hard to take it down. About $1 away from breaking even. Is gold? Gold's down today? Yeah, gold's down 1%. All right, so people are dumping gold. Is Bitcoin tracking back up? Bitcoin is at 105. Bitcoin 105.5. A little bit of room on Bitcoin. And S&P, dude, let's go green. Let's end out May with a green day. S&P, again, is up in the month 6.24%. So we're going to end out probably, as long as we don't fall 1%, up above 5% on the month. And if we can keep that, that would be very nice to see as well. Andrew, so Palmer Luckey did a podcast yesterday about working with Meta. So let me play a clip of him talking about their partnership. And give a little bit of some of the background here.
It's an unlikely occurrence. If you'd followed history, Meta, Facebook acquired Oculus VR. I'll let you kind of like
over her handling or mishandling of classified documents.
Right. And man, you were pilloried in the press. You got portrayed as like this hate demon. And then
dude, Palantir, we'll go back to that, but Palantir, what is going on? What is this news? There's got to be something, bro. Either these are algos or there's got to be some news here. But Palantir 128. I don't see the news. The New York Times did publish a hit piece today. Maybe that is getting people to be excited about Palantir. Because they're going against the New York Times. I don't know. Big contract coming. Maybe the street knows something. I don't see any specifics right here. That's a big move though, bro. That's not Michigan Consumer. That's probably something else that's going on right here. That's creating this momentum. That's weird. That is a big move. NVIDIA's not even moving like that. NVIDIA's still down 2%. Tesla's still barely up 1%, but Palantir right here, 5% on the day. Let me check resistance at 129. Let's see. It's weird because this was down at 122 back when NVIDIA was pumping on Monday. So it's kind of going the opposite now. 129 on Palantir resistance is 25,000 shares. 25,000 shares. Whereas some of these other names, Meta right here is also green, basically flat, 645. Hims is green as well. Hims and Palantir both moving. Hims up 3.4, Palantir up 4.5. You know, these names are kind of moving with each other. I think one could argue that they are sort of momentum-based trades in and of themselves, and you know they're both basically at all-time highs. So if they go up or down, then they probably will kind of move together, at least to an extent. But yeah, that is definitely interesting to see these two get some love. Mate, I have a new year-to-date percentage for you. Dude, this is interesting. The Fannie Mae deal. Yeah, but that was 2 days ago. Like, unless the deals are being factored in today, I don't think that would be the reason. Fannie Mae was a great deal, though. It's a great deal. Yeah, Tesla 360, bro. She's moving as well. This is at like 354 this morning in the pre-markets. All we need is the S&P to go green to have a great May. Dude, the Bears have to be shook about this, bro. They have to be shook about this. They just have to. I mean, so many of them had so much confidence in April because of the tariff volatility. And it was wiped out in like 2 days. It took a month to recover, but like the S&P was up 10%. Do you guys remember when the S&P was up 10% in a day when Trump issued the 90-day pause? Like, that was insanity. And it's like, if you were a bear, you had a couple of days of like, yep, everything, the world is ending. But if you stayed bearish, it just wasn't the right strategy. Unless, you know, we're going back down. But if we're not, then, you know, it wasn't the best idea. Is this headline too? Trump admin expands Palantir role to build cross-agency data backbone over $900 million in contracts. Is that the headline? Oh, let me see. Let me see if that's something. Let me see. If that's true, that could obviously explain why Palantir is... Oh, yeah, holy crap. Wait, no, but hold on. That's not a headline. That's from... That's a quote from the New York Times article. That's just... Yeah, that's not $900 million in new contracts. That's like the Maven contract, the ICE contract, IRS, all that stuff together. Maybe that headline, though, is... Like, maybe this headline right here that you're seeing... Even though we already know these contracts have to be priced in already to an extent. Maybe that headline is crossing through the business wire and that's why people are buying it. But like, it's from the New York Times. We already know that was the case. So maybe, okay. So the New York Times article from people that read it told me it was a hit piece, but if the article included a ton of quotes about new deals they got, which are not like breaking news because we already know about it, but maybe the rest of the world didn't know Palantir was getting all these deals. Maybe that's what's influencing the stock right here, because people are like, holy crap, I don't care about the hit piece opinion part of the article. I care about the fact that Palantir is getting all these deals from the government. I should buy Palantir stock. Maybe that's what's happening right now. I think that would be the best way to at least kind of explain this momentum. Meta 645, CRM 264. MicroStrategy 367, Rocket Lab still down 2%, and then you got HIMS 54.29. That's up 3.6%. My HIMS put, by the way, that $45 put, that put should be up. It is up 43%. So again, I sold the HIMS put for $45 when HIMS was at like 51, expiring 6/20. It is a 4% return. I'm up 45%, or I have captured, I could capture 45% of that 4.4% return and close the contract. But yeah, the puts are up a lot because HIMS is going up a lot, which is not too bad. Is Tessie moving more? Is she moving more? Tessie. Yeah, 361, dude. If the S&P makes a recovery, it's going to be fun, bro. We are 70 cents away from going green on the S&P. It'd be very fun to see this happening. Is it possible to acquire shares of Anduril? Again, if you want shares of Anduril, there's a platform called Hive. We were talking about it yesterday. You have to be an accredited investor, and you can buy private stock. You're going to have to pay a premium because it's buying it on the secondary markets. Honestly, I think retail should just wait till it goes public at this point. Like, how much are you, like, let's say you get to buy it at 30 billion and it goes public at 45 billion. I'm like, yeah, you get somewhat of a gain, but based on the fees, the carry, the interest, that these are all the things that come along with buying private stock on a secondary market, like it might not even be worth it. So the time to get into Anduril was 2 funding rounds ago. Now I think it's just waiting till they go public. And I don't know if the valuation is going to be egregious. I mean, I think the red flag on Anduril as an investment is that they don't have a commercial business, and that their defense business, although it's growing, they probably have crappy margins because they're a defense contractor. Like, they build hardware. That's not a great margin business. They use software to optimize their hardware, which is why they collaborate with Palantir, but it's not like they have 80% gross margins. So I would expect maximum a $50 billion valuation. If it's above 50 billion, I feel like it would be a bit pricey. Realistically, I would say 35 to 40 should be the IPO price. But I think Anduril will absolutely be a cult stock. Palmer Luckey has that personality. Defense technology is having its moment. I think people will absolutely adore this company, and they're going to buy the crap. I think it's going to be like Palantir to an extent. Palantir is just, their TAM is just so much more bigger because it's software and it's commercial. But I do think people will get excited to buy the Anduril IPO. Yeah, Lattice is cool, but remember, Lattice is their platform to help build their hardware. Lattice is not something they're necessarily making money off of. They're not, Lattice is not like Foundry, where a company's going to pay them $20 million a year for Lattice. That's not their business model. So I do think, as much as I'm a fan of Anduril, they don't have a commercial business. They're a defense contractor. They don't really care about having a commercial business based on everything I've seen from Anduril. And again, their margins are probably trash because they build hardware. The margins are probably better than Lockheed because they're using Lattice and software to help with their hardware, but it's not like their margins are anywhere near software margins. So I think their growth is going to be amazing, like above 50%. But profitability, I mean, I doubt they're profitable right now, and I don't think they'd be profitable when they go public, and they don't need to be. But it's not like it's a $100 billion company, in my opinion. At least not yet. But eventually, I think they can get there. Could Anduril be the new Palantir? I struggle to see that because, again, I don't see the infinite TAM that they have, whereas Palantir's Foundry, right, can literally be licensed to the entire world. So, maybe Anduril can get every single government in the world to buy their hardware, but that's also not realistic, right? Like a lot of, Germany's going to want to buy from Rheinmetall before they want to buy from Anduril. So it's one of those things where at the end of it, they're still a defense contractor, a hardware defense contractor. They're just a really cool one. And until they expand the business to commercial, which I think there is a commercial opportunity, but they haven't really showed any interest in that. Like, Palmer Luckey is very pro-America. He wants to build stuff for the West, which I love it. It's great. But that doesn't mean the business is as infinite in terms of its TAM as we think it is. But I still think it's going to be a great IPO. It's going to be a good one. Yeah, the Palantir IRS deal, that is not new news. We heard about that 2 months ago. But this New York Times article, I really do think is moving the stock. I feel like it's reporting everything that people didn't know about when it came to Palantir getting all these deals, and that's why it's getting some more momentum. Okay, let's go back to Palmer Luckey and see some of the stuff he had to say about Facebook and kind of why he's making up with Zucks now.
Every form of combat death. I mean, hundreds of new technologies. It's almost unthinkable. What would it take to eliminate most training deaths? Basically, just really good virtual reality simulators. I mean, it's kind of crazy how low-hanging the fruit is. And so maybe the way to put this is there's a lot of things in Meta that I invented, that my team invented before they acquired us. There's other things that I invented that the team invented while I was at Facebook, now Meta. And there's a bunch of technology that was invented after I was fired. And this partnership is about taking that entire base of technology, IP around hardware, software in the AI, VR, AR space, and applying it to solving our military's most pressing challenges. It's taking a lot of the people who have been working on these technologies for consumer applications and adapting their work to solve national security problems at a very low cost to the taxpayer. Like actually thus far, all the work we've been doing together very, very quietly with Meta over the last year has not been funded by taxpayers at all. Not a single dime. It's been entirely privately funded. And Meta's put in $60 billion, has put $60 billion into their Reality Labs efforts. And I think it's pretty great that the American warfighter is going to be able to benefit from that investment.
And so, okay, 2 questions, and then we're for sure diving in back into the.
So that's the kind of core of the thesis. I'll put the podcast link right here if anyone wants them to go more in depth. But basically saying Meta is going to be subsidizing a decent chunk of the money because they already have to build out their XR, VR, AR technology. Palantir right here up 4%. And that is why it looks like they're doing this partnership. I mean, at the end of the day, Palmer Luckey does need, it's nice to have a Mag 7 company in your corner that's able to subsidize with tens of billions of dollars the infrastructure and investment that's needed to be able to scale hardware defense technology across the military. And now that Zucks kind of doesn't care about, the perception of him supporting the government like he did 8 years ago, there you go. I actually think it's a really good partnership, dude. It makes a lot of sense. Meta's in this world. Palmer's in this world. They literally acquired his company 10 years ago. Zucks has unlimited cash. Palmer Luckey might be able to tap into their resources, their network whenever. There's no political issues anymore. I mean, like, this is one of those things where making up and deciding to partner versus be enemies makes a lot of sense. Palantir 4.7%. Where is HIMS? HIMS is up 5.2%. Reddit's also 110. That's up 1.14. And then Coinbase, that one's down on the day. Grab is down on the day. MicroStrategy down on the day. And Tessie trying to go for 362. Is the 10-year below 4.4? Holy crap. Is it actually coming down? It's very close to going below 4.4. It's at 4.40. It probably touched 4.39. If it gets below 4.4, that would be amazing for the equity markets. Is JetBlue running? JetBlue is up 1.7. Again, this one's heavily shorted as well, 20% short. Oscar Health, I still need to look deeper into this one. That's up 2.68% as well. HIMS, by the way, still short 31%. Still short 31%. I don't think the Ecuador news is a reason why Palantir is running. I really think it's that New York Times article that just points out all the contracts they've been getting. And if people are reading that and they're like, holy crap, Palantir is getting billions of dollars worth of contracts, I'm going to buy Palantir. That seems to be the reason why this is happening right here. But I think the SAP partnership, Ecuador, all that stuff, that's probably not the reason for why it's getting this momentum. Okay, what else do we have? Do you think Hood can be included in the S&P next week? I don't think so. I mean, I think they have a shot. Will they? I'm skeptical because the S&P committee is stupid and they decide to put companies that probably don't deserve in the committee to be in the committee. But could they get included? Yeah, I think so. I mean, what other companies deserve it more? Like AppLovin, I think, could definitely get in. But I don't think there's that many companies that deserve more than Hood. You don't think Hood? Yeah. I mean, look, I'm skeptical just because the S&P committee is the S&P committee, but like if I had to pick 3 or 4 companies to get in, Hood would be there. It'd be hard for me to deny that Hood should be in there. Unity is up 10% because they got a buy rating. Apparently Roaring Kitty bought 2 days ago, 11 million in out of the money calls at $30 price. Okay, hold on. Do we have evidence that Roaring Kitty bought Unity? If he did, that could definitely explain why Unity moved. Okay, so there's no evidence, but yeah, I see these orders, these option flow orders. You have people speculating that Roaring Kitty is getting into the name. Unity is a video game company. That'd be interesting. That'd be interesting if Unity gets in. Or if Unity is his next pick. You could definitely get retail excited. Tesla 361.97. Unity right here up 10%. Who knows, dude? Maybe it is. He's all but said it with picture posts. Let's go to his Twitter. I haven't looked at his Twitter in a while. Dude, he hasn't tweeted since January 22nd. I don't know. I mean, there's probably some Reddit threads that go deeper into this, but I don't know if he's in Unity. But if he is, yeah, this is going to turn into a meme stock as he begins to chase it. Robbing it right here, 63.92, almost green. Tessa, 362. There she goes. Up 1%. And then Palantir holding on to 5% up right now. Jeffrey's also upgraded Unity to buy. Yeah, that should be helping them as well. Unity and Unreal Gaming, right? That's their Unreal Engine or something. Those are the two duopolies in this space that that build these video games. Where's SoFi? SoFi is green, 13.18. Is anyone buying SoFi here? Has anyone been buying SoFi? Anyone DCing into it? I am just surprised at how flat it's been, dude. Like, there still is a lot of retail momentum around this name. So the fact that it's been stuck in this range is kind of surprising to me. Like, it's not been going down, but it's not been going up either. It's just been stuck at these levels. Been buying. Triple V is meeting Trump at 1 p.m. Exactly. Just bought more SoFi today. All right, so some of you guys are still buying here. I mean, look, maybe that breakout's kind of the longer the consolidation, hopefully the more ruthless the breakout when it ends up coming. Palantir 128, Meta 645. Where's Apple on the day? Apple is red, 199. You would think that China stuff would get Apple down even more today, but no, we're not really seeing a hit right there. Speaking of China, let's get an update right here on China. Keep going from there.
Of course, Sarah mentioned this morning reportedly on stalled talks with China, arguing the country has, quote, totally violated its agreement with the U.S. Let's get to Eunice Yoon. She's in Beijing. She has more for us and perhaps a response as well from the government over there. Eunice.
Thanks, David. Well, you know, so far the Chinese have not responded. But what President Trump is probably talking about is that the Chinese have been dragging their feet on removing export controls of certain rare earth metals. So in that Geneva agreement, the Chinese not only agreed to remove counter tariffs, but also certain non-tariff measures. The rare earths export curbs were not specifically named, but the non-tariff measures were supposed to be ones that were imposed in April. So it was widely expected that the Chinese would remove these export curbs. One thing that's also interesting is that unlike the tariffs, the removal of the non-tariff barriers didn't have a time frame. So there's been a lot of discussion here as to why the Chinese are not removing these rare earth export curbs. One camp believes that it could be a processing issue. The other camp believes that this is being purposely done in order to gain leverage on the future negotiations. And I have to say, guys, that this is quite a standard Chinese negotiating tactic where there have been plenty of business people who've said that the Chinese often will stick to the letter of an agreement, but not necessarily to the spirit of an agreement. Or sometimes when they're in negotiations with the Chinese, that the Chinese will reinterpret certain agreements after the fact. And so because of that, people are seeing this, at least in the business community, as a way for the Chinese to gain leverage in order to not to make some sort of concession.
So do you have any, has there any been official communication as to what comes next and how willing the Chinese are to come back to the table and fix this?
Well, I think it depends on whether or not you think the Chinese really want to have a trade deal. From the Chinese perspective, of course, they don't want to have tariffs or something that could hurt them economically speaking. But from a political perspective, they see this as more of a problem for President Trump, that Trump is the one who's really hitched his political success to having trade deals to justify his tariff policy. From a Chinese perspective, they don't have that same worry.
Eunice, appreciate that. Eunice Yoon in Beijing tonight. For more on what all this means for investors this morning, we're joined by Lizanne Saunders today, Charles Schwab Chief Investment Strategist. Lizanne, happy Friday. Good to see you.
Happy Friday to you too, Carl. Nice to see you too.
So, you know, Geneva handshakes, we all got a little more bulled up. Now that picture gets a little bit darker. You get a 50% warning on Europe. That gets removed a couple days later. We had a discussion with Jim this morning about how anyone models this kind of environment.
You don't model this kind of environment, which is why you're seeing such a high share of companies withdraw guidance altogether.
Dude, Palantir. I think the New York Times hit piece pumped our little Palantir, because the headline I'm seeing from all the accounts I'm looking at that report on business and finance news is Palantir gets $900 million of contracts. Now, if you're part of the channel, we already know that. We know the IRS deal. We know the FHA deal. We know the Maven contract, which was a $750 million extension. We know about all that. But apparently this New York Times article aggregated all of that, and they kind of like, that was part of their hit piece. That like, oh, look, Trump is giving Palantir all these deals. But people are like, wait a second, Trump's giving Palantir all these deals, and they're buying Palantir. And this is just incredible. Up 5% on the day. Is the S&P about to go green? Because if it does, we are back in action. Wow, S&P's 30 cents from going green. Dude, talk about a resilient market. Even the China stuff that Trump tweeted today was not enough. Robinhood right here is green. Tessie trying to get to 363. NVIDIA still down 1.4, but back at 137. It was at 135. Googs holding 170. We just need S&P to go green now. About 20 cents away. 20 cents away from seeing if we can go green. Everyone's year to date just changed in like 5 minutes. That's incredible, dude. That is absolutely incredible. I guess that hit piece just turned into a catalyst for people to see that Palantir's getting a ton of deals.
Maybe not quite to the degree that we saw back in 2020 with COVID, but I think it reflects the inability to provide cents per share estimates or guidance, 2-3 quarters out. And it's part of the reason why, even though first quarter earnings season was pretty darn good, there's been no extrapolation into the remaining quarters this year. And I think that's an important tell on where analysts are biasing themselves in the absence of that precise guidance.
Right. A lot of headlines this week about companies weighing price increases still. Hyundai was a good example yesterday. Best Buy said some of their price increases really only began in mid-May. Do you think some of the knockoff effects are still to come on prices?
Yeah, so if you look at the most recent inflation data, exclusive of today's PCE report, but you look at the CPI and the PPI in terms of the reference period that it encompassed, it was an average effective tariff rate of less than 5%, and that's up from about 3% pre-inauguration day. So at least those numbers, which were at the headline and core level somewhat benign, and that was followed by PCE today, you don't really have the full effect. I think you're absolutely right, Carl, that there is experimentation right now with pricing. Some companies actually admitting that they're doing it, but one can infer that with the inventory build that came earlier with the front running of tariffs, that boost to inventory at a low cost basis does provide a little wiggle room in terms of maybe testing the waters from a price increase perspective. And ultimately, I think what we're going to see is some combination of a pass on to consumers, especially where profit margins are really narrow. Profit margins are still high in the aggregate, but for many retailers, they're really narrow. So I think it's also going to depend on the company and the industry as to that share of pass on to the consumer or eat it in profit margins.
So is that an investing strategy? I mean, do you want to find stocks and companies that have more pricing power, better margins? Is that something that you're able to do by sector?
Well, you can do it. We're very focused on factor-based investing, and one of the factors that we have had on our focus list this year in an environment where we're otherwise somewhat sector neutral is net profit margins. And that's been a fairly strong performer at the factor level. So yes, you can screen at the factor level, and beyond just net profit margin, that forward earnings visibility, which would arguably be in areas where you're talking about companies not really directly impacted by tariff, strength of balance sheet and concerns about higher inflation and potentially higher interest rates, looking for that high interest coverage ratio. So you can fine tune the approach to navigating this market better at the factor level than at the monolithic sector level.
Nice chart floating around today looking at defensives, Lizanne, as a percentage of the S&P, healthcare, utility, staples. It's the lowest since 2000. And I wonder if you think investors if that reflects sort of this, we're going to power through this mentality.
Well, we've had such a growth bias in terms of market leadership, notwithstanding the weak period from mid-February to early April, when you did see those classic defensive areas like staples, healthcare, utilities perform better. It wasn't enough to boost that aggregate share. And I think particularly since the rally, we've all been focused on the fact that there was very much the
We are 13 cents away from 129. My goodness. Let me check resistance again at 129. Dude, if you add 129 covered calls, they're under pressure right now. If you had like 135, I think they'll be okay unless we pump another 10%. But incredible. 129, 37,000 shares. 37,000 shares. 37,000 shares waiting for one. Oh, there it is. Never mind. Well, 37,000 shares gone. There you go. 129, baby. 37,000 shares. Those got wiped out. And now go back for 130. We go back for 130. Oh, hold on. This might be why the market's... No way. Did we actually... Hold on. Did the Atlanta Fed actually say they're projecting 3.8% GDP growth? Did they actually? Holy, that's almost 4% growth, bro. Yeah, holy crap. The Atlanta Fed said we're going to grow 4% in Q2. Guys, Singapore is growing at 5%. Like, the US should not be growing this much unless, there are some friendly policies to encourage growth. Holy crap, dude. The previous expectation was 2.2%. S&P's got to be green on this. S&P's got to be close to green. Palantir 129.18. S&P, it's still down about $1. We need $1 to get green. I don't know if I believe 3.8%, but the Atlanta Fed has been right for the past couple quarters. I mean, last quarter, they said we would go negative, and we did go negative, even though it was negative 0.2. Now, again, this gets revised every other week, so I wouldn't be surprised to see this go to 3.2 or 3.5 or 2.9, maybe 3.9, maybe it goes higher. But if we are saying anywhere above 3%, bro, this is growth. This is like real growth. Like, it's not easy to grow above 3%. I mean, even freaking Bessent was saying, hey, maybe we could grow 5% a year. And, most people were laughing at him because growing 5%. I mean, even Brad Gerstner mentioned that on his podcast, like growing 5% a year is just not sustainable in the United States. Like, we're too big to be growing from that base. Like, India is growing at 7%. Singapore is growing at 5%. Like, you don't grow that much when you're this big. That's a big one, bro. That is a big one. That could definitely be helping Palantir right here as well. Palantir 129.33. Let me check 130 resistance. Let me check 130 resistance. Let's see. 130 resistance is on Palantir. S&P, yeah, weird. S&P is not really reacting to this. 130 is 197,000 shares. 197,000 shares. It's possible to break through that. It is possible to break through that. That's incredible, though, bro. That's a big GDP number, man. That's not a small GDP number. It's almost to the point where it's like, what? 3.8%? Are you kidding me? 3.8%. Palantir 129.25. Again, I see the sell wall using my level 2 data on Robinhood. It's not perfect, but I use level 2 market data on Hood, and that's where I get access to the sell wall. Unity's up 13%. Palantir up almost 6%. Qs and the S&P are dropping, so it's almost like the market's not believing the Atlanta Fed numbers right there. It sounds unbelievable, bro. 3.8% growth. When's the last time we had? Let me see. I'm gonna ask Grok. Show me the last 16 quarters of GDP growth results in the U.S. When's the last time we had anywhere near 3.8%? Yeah, it's been forever. The last one we had was Q2 of 2024. We had 3%. You can see on the screen right there. If Grok is not lying about this, which hopefully it's not. Q3 2023, we had 4.9. That was when ChatGPT was like, that's when NVIDIA had that quarter where NVIDIA went from pre-split like $10 to like $40 or something, some crazy quarter back in August of 2023. So the last time we had any type of quarter like that was about a year and a half ago, a little bit more than that. And the earliest we had was Q2 2024, 3%. 3.8 would be wild, bro. Absolutely wild. 129.65 on Palantir. Yeah, Q4 2021, we had 6.9. But remember, we had a ton of stimulus going into that recovery from COVID quarter. So Q4 2021, we had 6.9. But that was just, that was 4 years ago, and that was a lot of stimulus. And unemployment went from 20% back down to like 5%. So we had a lot of jobs. But we're not we're restrictive. We have high rates. We're not even cutting rates. Doing 3.8% with high rates, like that just means it's pro growth. It's market liking growth. Palantir 20 cents away from 130. Is the S&P finally green? S&P still not green. We got some green candles, but we're not green. And then HIMS is also 6% up. Palantir 25 cents away. NVIDIA still flat. Tesla 362. Hoodie 64.13. And Palantir looks like she wants 130, folks. It looks like she wants 130. By the way, GoTo is down 3% again in the Indonesian stock market. I think this acquisition is going to happen, folks. I don't know when, but if that stock keeps getting sold off, then people are obviously realizing that the company's likely not going to be around for the long term here. And again, remember, Masa-san is a big investor in GoTo and Grab, and he's down a lot on GoTo, and his Grab position is not really mooning. So he probably wants to see some consolidation as well. And then shareholders are down 80% on their GoTo shares over the past 5 years. Like at some point, they're going to want to return. And maybe an acquisition is the best way to get that to them. Palantir 129.54, Hood 64, Tesla 361, NVIDIA 136.78, Amazon 204, SoFi 13.15, PayPal 70.36. I mean, wouldn't the company selling off mean it's not being bought out? So that's a good point, right? Because you would think, okay, if they're getting bought out, people would buy into the stock in order to buy into it, because they're, the arbitrage of getting ready for the buyout. The perspectives I've seen from some of the other people that are in the region that are also bullish on Grab and the way they've talked about it, 130 resistance is 197,000 shares, by the way, 197,000 shares. The way they've talked about it is that people are just getting upset with GoTo because they're not executing. And it's kind of like a vote of disconfidence, I guess, of just saying that they're tired of the company and the stock. And the bullish thing on Grab is that Grab might be able to get a way better offer if the stock keeps falling, because instead of having to pay $7 billion, maybe they could pay $6.2 billion. So logically, it makes sense, right? You would buy into them if you think an acquisition is happening. But there's also, from what I've read, people that are just saying they're just so tired of owning the name that they're getting out of it. And that annoyance of the name and the annoyance of bag holding is also leading people to think that Grab's eventually going to buy them out and put them out of their misery. And that could also be what plays out right here. 130. We hit 130, folks. There you go. 130.08. Wow. We just busted through 197,000 shares. Holy crap, dude. That wall is gone. We're just under 130, but I think we'll be back there. Dude, those 200,000 shares disappeared like it was nothing. Wow. That was quick. That was freaking quick. 131 resistance is 37,000 shares. That's way easier than 130. You got some sell pressure just into breaking through. We hit 130.8 for like 2 milliseconds, and then it cracked down all the way back here to 129.77. I think we'll be back to 130. We should. I mean, usually this tends to happen every time we break those big dollars. But, dude, not bad. 130. I really think it's this New York Times thing, bro. It really does feel like that. Again, this is the headline. NYT reports Trump is leaning heavily on Palantir to build a cross-agency data backbone with over $900 million in contracts. I mean, that's not a hit piece to people that care about investing. That's like, wait a second, that's a lot of money. I'm going to buy some Palantir. And that's like the only reason I can give for why Palantir is getting this pump today. There's not much else I think could be the reason for this. Palantir trying to get right back to 130, 129.92. Let's see if we have a shot to get there. 133 is the all-time high. Yeah, 133.49 is the all-time high. Correct. 133.49. Wouldn't this just be end of the month rebalancing? I mean, why is HIMS up? I don't think institutions are buying the names they want. It could be. It could definitely be rebalancing as well. For Palantir, I think it's more specific on this headline, but yeah, for a bunch of these different names like a HIMS, it could just be rebalancing. Resistance there is no resistance at 130. Resistance is gone. So this is like, so we broke through resistance. Someone bought 197,000 shares at 130, broke through. A lot of people took profits at that 130, which is why you're seeing the stock go to 129.60. And so now you need more buyers to step in to get back to 130, but there's no like major wall of shares that needs to be overcome to get there. But 129.74, that's what we have on Palantir. Biden is about to speak live in Delaware. Really? Okay, I guess Biden's going to be speaking today. Trump again speaking at 130. Is there resistance to all-time highs? Yeah, I mean, there's plenty of walls at 133, there's 300,000 shares. So it's kind of, you got to take it dollar by dollar. But yeah, 133.50, there's like hundreds of thousands of shares waiting there. But there's not any real significant resistance to 130. It's just if volume dies out, it could stay below that. But whoever bought 197,000 shares 2 minutes ago at 130, thank you. Because we got through that level. And now we just got to see if this can continue breaking through. Tesla right here, 361, hoodie 6405. S&P still not green though. S&P 588. Still not green. It was Nancy. Dude, you know Nancy has not done anything in the past 5 months. She bought Tempest, Google, Nvidia, and I think it was Visa back in January, and she hasn't done anything since then. I think she sold a little bit of her Apple and Tesla, but outside of that, she bought like 10,000 shares at 120 for Nvidia. She bought a ton of Google 150 in the money calls. And that's it. Her updated portfolio, I'll tell you guys right now. I'll pull this up right here, but it hasn't changed much. It is, so Nvidia's 20% of her portfolio, then Google's at 13, Palo Alto's at 11, Broadcom's at 10, Vistra's at 9, Amazon's at 9, Tempest is at 8, CrowdStrike's at 6, Microsoft's at 5, Apple's at 4, Tesla's at 4. So there you go. Yeah, it wasn't Visa, it was Vistra. Sorry, it wasn't Visa, it was Vistra. So data center play, right? Instead of just financials. All right, let's get some more coverage on this, but we are seeing Palantir get some nice momentum here right now.
The fingerprints of retail traders. The retail trader sort of juice to this market, which is alive and well in the buy to the dip mentality, that is decidedly not veering in the direction of staples healthcare, maybe utilities in terms of the data center AI build out. So I think it's going to take a while, but that sort of power driver of the market higher from the early April lows being retail traders, there's still very much that bias toward the growth areas, the growth trio of communication services, technology, consumer discretionary, Magnificent Seven, the AI theme, and that's not disappearing in the near term.
Finally, on jobs, continuing claims we've mentioned a couple times this week. That's a multi-year high. All
right, there she goes, back to 130. There you go. I mean, usually when you break that wall, even if you stay under for a little bit, you tend to get above it. That's why people are buying it at those levels to break through. I mean, the only reason someone bought 197,000 shares at 130 was because they thought it was going to go above 130. So you tend to see some of that momentum come in. 130.33, 130.35. Now maybe there's too much selling here and that could get hit. Let me check resistance at 131. I think it's still 37,000 shares. 131 is 52,000 shares. 52,000 shares. All right, now I know for sure that everyone working from home is not working from home. Now I know for sure. Maybe you're doing a little bit of work during the day, You know, NVIDIA was flat, down 2%, had me in the background, still working. Now I know that no one's working. Now I know you're just staring at this. It's getting hit at 130 though. It's like, it's, you see that red candle right there. It's not as easy for it to break above it, but it's trying. It is trying. Dude, how many people work in tech? Put in the chat if you work in tech. Like if you're like, put in the chat if you have one of those TikTok day in the life tech jobs. Not saying that you exemplify what those people do, but do you have a job that's like that allows you to just like kind of do your own thing, sit by the pool and like get work done, even if you don't literally have to be inside of a meeting every other hour? Wow, that's a lot of you. That's why you guys are part of the stream every day, bro. There you go. Yep. Tech coding. I work in IT. Yep. Yeah, boy. Dude, you guys, I love that you guys have so much pride about it too. You're just like, yeah, this is my life. I just, I answer my Slack messages, do some coding, and I'm on YouTube all day. My team stratus is green, so that's all that matters. Yep, that's fair. I buy stock from the office. Amit, I've been saying for years, your people don't work. But no, you guys definitely have to work because how else do you get the money to invest, right? So everyone here has money to invest, which is coming from likely a job. But, you might be good enough at your job where you don't have to literally be present from 9 to 5 doing said job. AI is doing all my coding right now. Dude, this is hilarious. I respect it though, dude. I mean, like, if Microsoft is going to pay you $250,000 a year to like do some coding and you can find a way to help AI maximize that. I mean, that's just smart. It's up to Microsoft if they want to fire you, right? If Microsoft's not going to fire you, then it is what it is. You got to find your own way to navigate being at work. We hit 130.4. Hit 130.4. Now it's back to 130.3. Practically a day trader and engineer. Christina says, I'm a stay-at-home mom. I literally sit by the pool all summer and invest my husband's income from my phone. It's the best. That is like so epic. Stay-at-home mom, sit by the pool all summer, invest my husband's income from the phone. And your husband should be proud that if he's not into investing, that you're into investing and that you're taking that income and trying to compound it. 130.6, folks. Are we going for 131? Are we going for 131? Why'd you choose Microsoft today? Because Microsoft just fired 3% of their workforce because of AI coding. So that's why I remembered when that person brought it up. But in general, bro, like if you're at a public company or you're at a job and like you get your job done, like when I had some of my consulting clients 4 years ago, like I'd be on the clock from whatever amount of time I'm billing them for, but I don't need to fucking be like I would, if I could get the job done in 30 minutes and they've given me 3 hours for the contract, like what am I going to tell them? Oh, take back the 2.5 hours. No, bro, like screw that. Like if you gave me 3 hours and I got it done in 30 minutes, that means I'm just really good at my shit. And so it is what it is. So I respect it. I respect being able to get your stuff done, even if you don't need to literally be working every second. 131, 48,000 shares. 48,000 shares for 131. 133.50 is, are we 5 cents away? Holy crap. There it goes. 131. 131. My goodness, just broke through those 48,000 shares, dude. Shout out to the New York Times, bro. Shout out to the New York freaking Times. What a hit piece. What a freaking hit piece. All right, well, you know what's better than 131, folks? You know what's better than 131. 132 resistance, 38,950 shares. 38,950 shares on 131. Not bad. Not freaking bad. So let's see. Let's see if we can. Dude, this really is hilarious, bro. Again, the New York Times put out a hit piece, but the main takeaway that all the business accounts are reporting that have influence over investors and headlines that drive the market is the New York Times reports that Trump is leaning heavily on Palantir for government contracts. That is a bullish headline. That's not a hit piece. if you actually read the article, if you have a New York Times subscription, maybe you get to see the opinionated part about why this is so bad. But if you just read the headline, it's like, no, that means buy Palantir. That's what it means, 130.92. And again, remember what Skrelly said about Palantir yesterday. I thought it was a really good point, what he said, which is just that everyone complains about the valuation, but the growth is what you need to care about. It's a very simple argument. It's like if they grow top line 40, 50% for the next decade, you totally justify these numbers, and it's still going to get a premium on top of that, and you're probably going to get a higher stock price. Now, if they mess up on the growth, then yeah, the story's done. So they can't mess up on the growth. And I think Palantir knows this. I think the next few years of earnings, they know that their valuation is so aggressive that they need to deliver just incredible growth. And based on everything I'm seeing, that you guys are seeing as well, Fannie Mae, Ecuador, SAP, Carps in a different country every day. He was talking to the Polish Ministry of Defense yesterday inside of their DC offices. Like, it's becoming obvious that they are expanding in such an aggressive way. And even if the valuation is aggressive at 300 billion, that level of expansion, this is what Skrelly was talking about, is going to get a multiple. It's going to get a premium. It's going to get people to be excited about it. And if they can sustain it, which again, they only have 750 customers, which means I think, the 10x on customer count is coming over the next decade, then this is a stock that doesn't have to go back to 30, 40 bucks. And that's why we're seeing some of this momentum. So there you go, 131.13 on Palantir. Again, 132 has about 40,000 shares. To see if we can get there. Dude, this is pretty incredible. Again, I really do think it's because of this New York Times thing. That's what it feels like. Amit, can you pull if Trump talking today will pump or dump the market? All right, let's do that. So Trump talks at 1:30. Let's do that. Will Trump talking dump the market today? 1:30 he's going to be talking with Elon. We'll see what he says. Again, for everyone asking how I see the level of resistance, I say this every time. I think I need to pin this somewhere just so everyone can see it. But you type in NASDAQ level 2 order book flow on Google. I use Robinhood. I pay $5 a month for Robinhood, and I can easily click on the yellow arrow near the strike, and I get to see all the resistance levels. That's how I access it. But you don't have to use Robinhood. You can get this data from Webull. You can get this data for free. Some places you pay for it. Just type in NASDAQ level 2 order book flow on Google. There will be a ton of websites you can look at. I just use Robinhood because it's easy. And anyone can see this stuff. So that's how I'm getting the data. At the same time, someone sends a super chat on how do you find the resistance. Yeah, so that's how you do it. That's how you do it. You type in NASDAQ level 2 order book flow on Google. You will find it's just the order book flow. It's not like fancy data. It's just every brokerage has this data of all the orders, the buys and sells coming in. Even Webull, if I switch to Webull, Webull has it for free right here. You can literally download Webull and see it as well. You see all these orders coming in, the time and sales. There's a bunch of them right here on this left-hand side of the corner. As you see all the green and red coming in and out. That's all the orders coming in. 131.4, folks. We're at 7.5%. So yeah, that's where I find it. And anyone can find it as well. Show them how you're able to read it. That's what they're asking. Oh, you just look at the number and look at the number of shares that are at the ask. So remember, there's a bid and there's an ask for every stock. There's what someone's willing to pay, what someone's willing to sell. And can I open it up on my desktop to show you guys? Because it's hard to show on my phone. I don't know if I usually don't use it on my desktop. Let me see if I can open it up on Robert. But I just scroll down to 132, 133, wherever it is, and I look at how many shares are willing to be purchased. Let me see. Is it here? Oh, I don't see it on my desktop version. But oh wait, hold on. No, I think I have it. Yeah, here it is. Okay, hold on. Can I show you guys this? Okay, so this is on desktop. May not be as easy to see right here, but as you can see right there, there it is. So if I want to go all the way down to 131, 130, or we were looking at 132, you can just scroll down and then you see the price of the order book on the flows. then you go back and forth. Okay, hold on. Tom Lee's on CNBC. Let me pull that up. Let's see what Mr. Lee is saying. And then we will keep an eye on Palantir. Palantir 130.87, so getting rejected at 131. Let's see if it can and keep it going. All right, here's Mr. Tom Lee. Here is Mr. Tom Lee.
Fundstrat Global Advisors Head of Research and CNBC contributor Tom Lee. Tom, you've been right. It's paid to buy the dip. Do you still feel that way when we get these sort of tariff back and forth headlines?
We still think dips are going to be pretty shallow. It's still the most hated V-shaped rally. I mean, the COVID rally was hated until we made new highs, and the rally from the fall of 2022 was hated until we made new highs. It's not any different this time. Hedge funds, I think, have really been very cautious. They were forced to sell near the lows, and we know there's $7 trillion cash. So while a lot of people are calling a top, I actually think that this is more of a mid-cycle kind of start of a new bull market.
Why? Why do you feel that way with the economic data starting to weaken and the fundamentals changing as a result of all the tariff drama?
Well, I mean, if I just did a relative comparison, when I look at the company outlooks now compared to February 2025, I actually think the outlook's actually better. When we look at 2026, I think we have better visibility on deregulation and potential tax benefits. I think the tariff risk is actually diminished compared to February 2025. And while the Fed's been on hold this year, I think that there's a case to be made. They're going to be dovish next year, given what's happening with housing. And I think the trend in core inflation, and that's more important to markets, is the Fed in 2026 than what the Fed does the next couple of quarters. So, I mean, overall, I think it means PEs could go up.
Tom, are you more confident in the Mag 7 idea or the small cap idea?
Carl, it's an overused word, but I think it is a bit of a barbell. I mean, in the near term, the washed out groups we thought would be the beneficiary, and the Mag 7 was really leading that because so many of the Mag 7 peaked earlier and bottomed before the S&P did. And we still want to stick with that. But as I look at the second half, I think the small caps really have a strong case to be made, because as long as we move towards a tariff resolution or the markets feel that way, then I think investors can actually start putting flows back into stocks other than the Mag 7.
Are you keeping a strategy in which tariff tensions go back up in your back pocket somewhere? And how does that read?
Well, I mean, I think we're all operating with the realization that there isn't necessarily an end game in sight for the tariffs. And I think these court rulings may push us a little closer to the end game. That's why I think it's a slight net positive. But at the end of the day, we all have to realize it's still a process. But I think investors are too pessimistic about the outcomes. I mean, I think we've been a little too the market's been too pessimistic about what tariffs could do. I think we've had a lot of folks that turned structurally bearish because of Doge. But when we look at what's happened in the last couple of months, I think it's more bark than bite, I guess is the best way to put it.
So when you say I think you just said we're on the brink of a new bull market. What do you mean? What are you looking at?
Well, I think what happened at the April lows, which was very capitulatory, and it was a huge liquidation event, and we had a VIX spike to 60, that is the kind of flush and reset that I would associate with a new bull market. So I think we had what was a miniature bear market, but has essentially rebirthed a new bull market. So it does mean we should be looking for where leadership comes from, but it also means that there's a lot of capacity for positive surprise.
Finally, Tom, where does it leave briefly popular trades like gold? Certainly the way Europe has outperformed this year. How do you fold that into whatever mix you're going to have globally?
Well, gold's had an impressive few years, right? This year's been great, and the last couple of years have been very good, but I'd almost look at gold as a leading indicator for what Bitcoin could do. So I think gold is still attractive. I mean, it's an impressive rally, but I'd almost look at it as is opening the door for Bitcoin to do better. And for the rest of the world, I do think there was room for multiples to re-rate outside the U.S., and I think that's taken place. But I'm not necessarily a believer that the next Mag 7 and the next leadership of stocks comes outside the U.S. I think when you look at global stocks, I think it's still 46 out of the 50 largest companies in the world are actually U.S. companies. And I just don't think that's going to change much in the next 10 years.
I mean, Tom, it sounds like a lot of your bull case right now rests on the Fed really pivoting in a more dovish way. But we are not getting that indication that that's happening anytime soon. They feel very content just waiting and seeing, and also worrying a little bit about inflation.
That's right, Sarah. I mean, I think the Fed's appropriately on hold because they don't have the visibility on how tariffs will affect not only just realized inflation, but consumer expectations around inflation. But next year, I think that the reason the Fed can be more dovish is that housing, which is 55% of the rise in inflation since 2019, and it's really the largest weight in the CPI basket, that's no longer providing that upward inflationary pressure. So if I look at what the Fed has, they have a much clearer case to be cutting next year. And if core inflation is falling, they're 200 or more basis points tight. So there's a lot of room to cut.
Okay, Tom, thank you for coming on and making your case after a very strong month of May.
Tom Lee's bullish, baby. And he's been bullish for a while. So here's what I'm going to do. Now when I look at the order book resistance, since everyone's asking, I'm just going to share it on the desktop. So as you can see right there, this is exactly what I look at on my phone. So every time we get to a new dollar level, I'll just share it on the desktop so you guys can see it. 132 has 46,739 shares for Palantir. 46,739 shares for Palantir. Palantir getting a little bit of a hit from that 131.50 range, 130.6, still up 7%. I don't think anyone would complain if we end out 7% of the day. NVIDIA, though, that one just getting disrespected today after earnings. I mean, down 2.3%. So really, it's kind of weird, people selling off NVIDIA and buying other stuff, but definitely getting a little bit of a hit. Now, what Tom Lee was saying right there about a new bull market, a lot of people are calling this kind of late stage bull market. I know Tom Lee's a perma bull, but his argument is no, we're like heavily inside of a new bull market. And a lot of that is based on the data that he's looked at in regards to inflation falling. And then obviously what he talked about at the end, which is tech companies in the United States being the best tech companies in the world. One of the things he mentioned in that interview was that he doesn't see the next sector of growth coming from anywhere else in the world besides the United States. And if we're growing GDP at freaking 3.8%, like the Atlanta Fed is projecting, then yeah, I mean, the United States will have the single best growth in the world, not from an absolute percentage basis, but the quality of our growth is going to be phenomenal. And if that's the case, I think Tom Lee's right. Like, it's hard to be bearish on the stock market when we're growing GDP at almost 4%. Like, now granted, Q2 might be a little bit of a rebound from Q1 because we had all that tariff stuff with the imports. But if we can keep up anywhere near 2.5 to 3% for the rest of the year, I think that would be very, very, very bullish. So, yeah, not bad. What are your thoughts on NAV erosion on the Yield Max ETF? So Steve and I will talk about it a little bit more later throughout the day, but my thoughts on NAV erosion are more so about your timing, right? NAV erosion mainly happens when the stock tanks, because now when the Yield Max ETF is selling calls against a stock that tanked and the stock quickly recovers, your profits are capped by the covered calls. But if the stock stays flat, there's not really NAV erosion in the same way that the stock that like an NVDL or a BidX or a TSLL gets eroded, because the stock has to move for their leveraged for funds, right? For the leveraged instruments to move 2 or 3x with the underlying. So if a Tesla was flat for the past 2 months, TSLL would have been horrible. But because Tesla moved, TSLL moved. But if Tesla was flat, a Yield Max ETF on Tesla, which I think is TSLY, could have done very well. It didn't do as well as TSLL, but it could have done very well because it would have just been printing the covered call premium, and the NAV wouldn't have been eroded as much as an actual leverage ETF. So we'll talk more about it today with Steve. He's done a lot of research on it as well on the market close. But if a stock moves aggressively, the Yield Max ETFs are horrible because you miss out on all the upside. If a stock stays within a range, which is what you want when you're selling covered calls, the Yield Max ETFs are actually pretty good. And the funny thing about MSTY If Saylor keeps diluting, MicroStrategy is going to be range bound no matter what Bitcoin does, because it can't move up if there's more dilution. And so if MicroStrategy stays in this, like, call it 320 to 400 range, MSTY is going to do very well because they're just going to keep printing off the covered calls. Now, if MicroStrategy goes to 500, it would have been better to just buy MicroStrategy. But if not, then the flatness of the stock actually helps with the volatility of the yield max ETF. Tesla 361, Nvidia 135.75, Palantir getting some red candles right here from 130, 150. That was the high of the day. Now 130.4. And Robinhood going green at 64.47. Robinhood was at almost 65. It was at 64.80. And now it is still slightly green on the day. Amit, please, quick recap on Palantir Pump. So my TLDR is that the New York Times tried to publish a hit piece, and in doing so, they talked about all these contracts Palantir is winning. And it seems like the investor community saw that headline and was like, holy crap, we didn't know Palantir got $1 billion worth of contracts. We're going to buy Palantir. And they kind of ignored the opinion part of the hit piece. And so that's why I think Palantir is pumping. That's kind of my best guess for what we're seeing right now. Nvidia, though, I mean, yeah, Steve was right. He thought it would retrace after these earnings, and that's kind of what we're seeing. And it's not retracing because the earnings were bad. I think it's just retracing because the earnings weren't so incredible to the point where you just can't imagine it going down after earnings. They missed guidance by $8 billion. Gross margins were down 10%. Again, not really their fault. It's more so a China thing, but still, you can definitely see how the market feels less comfortable giving it a 150 level. Which is kind of what I thought would happen too. I didn't think we would get to 135 even before earnings, but I felt like it would consolidate. And it's, I thought it would consolidate around 125, 130. Now it's consolidating maybe at 130, 135, which is fair. But again, it continues to be a stock. We're writing covered calls on it. It's finding a way to print money because the volatility is just high, but the moves aren't as aggressive. Tesla right here going below 360. So we're getting red candles across the board. Where's the S&P? S&P is now still down 0.32%. S&P has not gone green on the day yet. Uber down 1%. Walmart's up 1%. Lyft's down 0.5%. TLT's flat. Nubank well below $12. That COO leaving definitely was not the best for Nubank, even though they had a good earnings. Lockheed Martin's up a little bit. Red Cat's down 2%. CoreWeave up about 2.7%. All the semis. Quantums, by the way, are all red. Rigetti's down 6%. Qubit's down 3%. QBTS is down 1%. IONQ's down 5%. Mag 7s are Meta's red, Google's red, Nvidia's red, Tesla's slightly green, Amazon's red, Apple's red, Microsoft is flat. And then the semis are all red. Qualcomm, TSM, Intel, SMCI, ASML, Broadcom, all of them going red with Nvidia. By the way, I mean, selling covered calls on Palantir right here also, I don't hate it. Why? Because Palantir is $3 away from all-time highs. And unless you think it's going to go to 140, 150 anytime soon, the premiums are pretty aggressive. I mean, let's just check the premiums right now. 130. So we're at 130. Let's go a month out. Let's go to June 27th. Or let's go a week out. Let's go to June 6th. Yeah, dude. I mean, look, you can get paid $1.29 for a $140 call for June 6th, which means Palantir would need to add about $35 billion in market cap in the next week. And there's no earnings. There's nothing like that, right? If you want to go to July 3rd, so about a month out, you can get paid, let's go to 145, more aggressive. You can get paid $400 for a $145 call a month out. That call is up 92% of the day. That's why you sell calls when things are green, because that's when the option chains explode, because as the stock goes up, the option prices go up. So let's just say you bought 100 shares of Palantir at 130. That's $13,000. You would get $405 of premium. You can get a 3.1% return on that $13,000 you would be spending today to sell the 145 call a month out from now. Because someone's buying a call at 145 because they think it'll get there in a month. Now, let's say it does get to 145 in a month and your call's underwater. Do you think it's really going to 150, 160? I mean, I don't think so. I think it'll eventually get there, but not in a month. And this is where the yield max ETFs take advantage of this volatility. And this is where you can as well if you sell those covered calls. My 135s today are being challenged. Didn't expect that yesterday. Yeah, Palantir was at 124 yesterday. So The cool thing is, again, about these, like, yeah, your 135s are being challenged, but if it doesn't go up another $5, it doesn't matter, right? Like the call buyer needs that 135 to happen. The call seller just needs it to be 134.99. And then, you know, you keep your shares and the premium. Do you take a loss when rolling? Yes. So you take a realized loss when rolling, but you recoup those losses when you close the contract eventually. But remember, you keep the premium. So the premium you keep no matter what. You're keeping the premium that gets credited to your account, but it doesn't count as a taxable premium that you've achieved on a realized basis until the contract is closed in the green, which is actually productive because let's say it's December 31st and you have a ton of calls and you're up like 400,000 for the year and you can roll them into 2026 and you can take all these realized losses against your calls. You're kicking the can down the road when it comes to paying the taxes, but at least, you know, you can get some breathing room if you're up a ton of money. So there are some strategic ways to navigate rolling as well to help the taxes as well. Amit, do you still cover calls on your Palantir? Yes, not a lot. I do it on a very small portion of the position, but yes. Is NVIDIA still down? NVIDIA trying to get a recovery, 135.94, still down 2.3. Palantir holding 130 like a champ. If it can hold 130 for the day, that'd be awesome. Hood 64.75, and then Tesla still holding 360 right now as well. Trump's talking at 130. I don't think I'm going to be streaming that, guys, because I'm going to have to go in like 10 minutes, but I will be posting it on Twitter, so you can catch my Twitter updates. And we'll talk about it on the close. But yeah, he's talking to Elon at 1:30, which most likely means it's like 2 o'clock. It's not going to start at 1:30. So it's going to be later throughout the day. China's U.S. Embassy spokesperson says both China and the U.S. have maintained communication over their respective concerns in the economic and trade fields on various bilateral and multilateral occasions. Okay, so that's good. That's not super bearish. It's better than what Trump said this morning about China. So hopefully we get some level of resolve with those trade deals soon. Again, the rare earth mineral stuff is the main concern that the administration had. So maybe Trump tweeting about that is just trying to get their attention as well today. Today is the last day of the month. I forgot. This could be another reason some wonky. I mean, like Palantir up 6%, NVIDIA down 3%. Like it could also just be end of the month. Lots of funds, OPEX, rebalancing, option expiring trades. Like there's so many things that could be happening today that could be causing some of this market action right now. Snowflake just 1,000% behind Palantir. Dude, Snowflake, just like it was just not the pick back in 2022. It's so funny. I remember these debates, bro, with Snowflake. I remember this stuff. Snowflake versus Palantir. We used to have this debate every week on Palantir Weekly. And the street just kept buying more of this shit. Warren Buffett kept buying more of it. And Palantir was stuck. But it completely was just not the trade. Yeah, I know we have May 31st, but that's not going to be a trading day. That's what I'm saying. It's the end of the actual trading month. May 31st is tomorrow. So it is the last day for trading. Trump Media has officially closed the deal to hold its Bitcoin in its treasury, signaling a move into cryptocurrency assets. Okay, so that's not something we didn't expect. Trump is raising $2.5 billion for his Bitcoin treasury for DJT. DJT down about 15% for the week. It's down about 1% on the day. And that's what we've got. All right, I think that's it. Is that pretty much it? Amit, do wash rules apply for the realized loss and rolling? Honestly, I don't know. I have to research that. They might. I feel like they would, but I'm not fully sure. So I'd have to look that up if wash rules apply on the realized loss from rolling. She's still holding 130. Oh, what'd you guys say on the poll? 60% of you said yes. Will Trump talking dump the market? Okay, let's do another poll. Does Palantir close 130? Does Palantir close at 130? Amit, how would you handle a 130 Palantir covered call? I would roll it right now, right? There is a world in which Palantir goes below 130, but because it's so close, I wouldn't give it the risk. So I would roll it to next week, either at the same price at 130, or I would go 2 weeks out and get to like 132. And I would just close the trade right now, because you don't want to wait until 8 p.m. and then Palantir's at $130.05 because it happened to close above it and then you lose your shares, right? So if you're very close to the strike on expiration day, you close, right? You don't try to get greedy and think you can win the trade. You're technically winning the trade because you're barely above your strike, but you extend the trade, give it more time so that you don't lose the shares, especially if you care about keeping the shares. Wash rolls do apply. Okay. Yeah, I had a feeling they do. I have to do more research on it, but I would imagine they would apply even when you're rolling. I would do a 150 expiring next week. See, I don't think we're getting anywhere near 150 next week. I don't think you have to be that conservative, but if you have a big Palantir position and you really don't want to lose your shares and 150 is paying even pennies on the dollar, like, yeah, that's just okay. Then do 150, right? If you don't think Palantir is moving up $20 in a week, not in a month, not in a year, but in a week, then you collect those pennies. Let's see. What is the 150 paying for next week? Given the stock is up 7%, you should be getting some more premium. 150 is paying, dude, 150 for June 6th is paying 35 cents. You're still getting 35 cents, which means if you did 10 contracts, which is 1,000 shares, you'd still be getting $350. Those contracts are up 400. See, so those contracts are up 400% today. So if you bought the $35 call yesterday for 150 June 6th, you're up 400%. The option seller is never going to be up 400% in a week or in a day. The option buyer has the probability, based on what we're seeing right now, to be up 3, 4, 5x in a day, especially if you bought that call yesterday or if you bought that call even 2 days ago. But the option seller also is not going to lose the majority of the time as the option buyer, because most of the time you're not going to be up 4x in a day. But if you get 4% in a month or 3% or 2% in a month, like that's a lot more sustainable, a lot more steady income, and a lot less gambly than trying to get a 4x in one day. Robinhood, by the way, 65, breaking 65 right here. Very nice to see above that $65 level. But we are breaking through. Closing and opening of a call option is the same as rolling. So when you're rolling, you are buying to close your current contract and you're selling to open your new contract. So when you're done with a covered call, you buy to close or you let it expire worthless. When you open a new one, you sell it. So for example, I have 10 contracts today on Robinhood at $70. Let me show you guys this. I have 10 contracts representing 1,000 shares that I sold, I think, on Monday for $70 on Robinhood. As you can see, the contract is now worth 2 cents. I collected on average 51 cents, $50 for 10 contracts. So I'm up $488, 96%. That's money that is credited to my account that I already got on Monday. But today, when the trade closes officially, it will be a realized profit. And if I wanted to close this right now, I would have to press trade, press buy, at least on Robinhood. And then I would have to pay $20, as you see right here, to close the contract, because I have to give back some of the premium if I'm closing the contract. So I have to pay $20 and I keep the $488. But why would I do that? Because I have zero faith that Robinhood's going to get to $70 in the next 3 hours, which means that contract will expire worthless and I'll keep that extra $20. This is where I'm being greedy here, but I'm being greedy within reason because I don't think Robinhood's getting to $70 by the end of the day. And if it does, I'll manage it. But if it doesn't, then, you can kind of relax. But if my call was at $67, I would probably buy to close or roll it, because Robinhood theoretically could get to 67 or 66 or 65 if I had a $65 call. But at 70, I think I have a nice margin of safety to be like, you know what? I don't think it's going to really pump up another $5. My boy said zero faith. Yeah, dude. I mean, like $70 would be literally breaking 52-week highs, and realistically not breaking all-time highs, but basically breaking all-time highs, because last time we had anywhere near 70 was 4 years ago. So I don't think that's happening. So I can make that bet with him. I could be wrong, but if I'm right, then that's $500 I got on 1,000 of my Robinhood shares, because some Gambler on Monday was like, hey, I think Robinhood is going to be $70. This is I know I keep reiterating this, but I really do believe in this strategy for retail. We're not going to be old day traders. A lot of us are not amazing at reading the charts, including myself. Buy and hold is a great strategy. DCA is a great strategy. But if you want to generate some extra income on your shares, it's not crazy to learn about how you can use volatility to generate premiums. Especially when the options market on some of these names that we talk about every day, Tesla, Nvidia, Robinhood, Palantir, those are so deep. There's millions of contracts traded every single day on these names, which means the money is out there. It's just a question of if you want to participate in the options market. These were the top 10 stocks that were traded yesterday. Nvidia had 5.8 million contracts. Tesla had 2 million. Apple had 1 million. Palantir had 512,000. MicroStrategy 512,000. Corey 500,000. C3 AI, GameStop, AMD, Amazon. I mean, anyone can be a market participant in this. Just don't post on X about it. That post was insane with the comment section. I think the reason that post blew up is because the screenshot said max loss unlimited, which, again, the max loss is not unlimited. So I think that's why people got upset about it. But also people get upset. Dude, people get upset in general when you talk about options because they're so taboo, because the general theme is options can blow up your account, which is not wrong. Options absolutely can blow up your account if you're buying them. If you're selling them, it is like, could it theoretically blow up your account? Yes, but it is not the same type of blow up your account horror stories that you see on Wall Street Bets from the degens that are buying options all day. Most people don't even know that you can sell an option. I mean, I didn't know that until last year. Last year is when I really started diving into it. I was like, wait a second. I could sell someone the volatility. I don't have to buy the volatility. And it changed my life because I was like, wait a second. That's like, this is how market makers make so much freaking money because they're selling all these calls to people that are willing to buy them. And there is no reason why you can't also be a participant in that market. So I think people generally think it's taboo, but that's the same thing people say about investing, right? That investing is scary and it's like, no, it's not. It's just like, you have to do some research about it. Like, it's actually not that scary. Selling calls are not that scary. Selling puts are not that scary. But if you're going to have, the taboo in your brain that everything's everything's like, a risk. It's like, yeah, there's always gonna be a risk, but like, you're not gonna make any money in life if you don't take any risk. And option selling to me is one of the best ways to mitigate some of that risk, if anything. Google, by the way, falling below 170, 169. So you are getting some red candles across the board. MicroStrategy 366, Grab 486, Coinbase 248, Tessie holding on to 360. Palantir loses 130. She lost 130. She freaking lost 130. It is what it is. HIM's right here, still up 5%. So HIM's holding on to 55. It was at almost 56, but still holding on 55. To sell options, you have to have 100 shares. Yes, you have to have 100 shares, or at least the cash to buy 100 shares on the put side if you're selling an option. And the other good thing about Robinhood is they don't let you sell naked options, right? There's other platforms where you don't need to have the 100 shares to sell like there are platforms where you can sell a call against Palantir for 140 and you don't have to actually own the shares, which means if it goes to 140 and you don't own the shares, guess what? You have to buy 100 shares at 140. Now, if you bought the shares at, 110 and it goes to 140, the worst thing that happens is you could roll it, A, or B, you sell it and you make $30 in the middle. And you don't blow up an account because your calls are covered. The calls go away. You keep the profit. You keep the premium. Boom. You live to fight another day. Now, if you do it on a naked perspective and you sell thousands and thousands of contracts and then you end up getting called for them, like, you have to spend a lot of money. You might not have that money, and then you blow up your account. That's what no one should do, no matter how sophisticated you think you are. I mean, like, at least I wouldn't do it because I'm just like, that's scary. But if they're covered, it's not as scary. Fidelity does that. Yeah, Fidelity, Tasty Trade, Schwab. But again, those are more advanced brokerages, so they allow it for advanced traders. It's just, if you're not advanced like myself, I mean, I think I know some stuff about the markets, but I'm definitely not advanced enough to manage a naked call. I'm kind of happy Robinhood doesn't allow that. And I hope Robinhood never allows that, because the thing about Robinhood is you have a lot of people that use the platform that would try to do it because, there's the general sentiment of young people taking risks, all that stuff. And you got a bunch of degens on Hood. So I don't even think Robinhood should allow shorting, to be honest, because again, with shorting, you could have unlimited losses. Buying puts is fine. But if you allow people to short, I just feel like the investor base of Hood would do it. I'm not against them allowing it. I just think the reason they haven't allowed naked puts and naked calls and shorting is because they know, like, hey, we got some degens that are going to easily blow up their accounts if they do this. So I don't know. Maybe eventually they'll allow it, but it is one of the platforms that you can't do it on. Palantir 129.44. Dude, if we can even hold 128, that would be up 5% of the day. Not horrible. But it is taking a little bit of a haircut right here. Amit, what's your rule of thumb for setting a price target when selling covered calls? I like looking at 0.2 deltas. Some people like 0.3. I like 0.2 deltas, just kind of the probability of your option getting in the money. And for next week, I would do 140s. I don't think that's great. Or 135s if you want to be a little bit more aggressive. 135 to 140 to me is not, it's not wild. I wouldn't do 130 though. Like I wouldn't do things that are super at the money. I would do like, you know, like a 15-20% move is what you're, or at least a 10 to 15% move is what you're looking in the stock, because it's not easy for a stock to do a 10-15% move. Especially it's not easy for do it to every week. So maybe it does it this week and then you're underwater on the call and then you roll it. Can it keep doing it every week? Like this is not 2024. 2024, we had a lot of government spending of money that has been cut to an extent this year. So a lot of that free money is out of the system. 2024, you had NVIDIA really entering into its growth stage. It's not growing at 300% anymore, right? So 2024 was just a different market. And that's why people, I think, got turned off on covered calls last year, because they got wrecked on pretty much every stock in the market with covered calls. But 2025 is a different market. Amit, what do you mean by DCA? I mean dollar cost average. So DCA is when you buy Palantir at 129, you buy Palantir at 115, you buy Palantir at 100. You're never going to get a perfect bottom of a price, but you will constantly average into it. And over the long term, you know, if your average is like 127 or something, and Palantir is at 500, you're not going to care that you bought some shares at 135 or some shares at 100. So that's what dollar cost averaging means. So do you buy to open calls? No, you sell calls. You sell calls. So you don't buy to open calls. You buy to close calls after you sell to open them. But on your brokerage, you click sell, you click call, and then you are selling that call. And again, you need to have 100 shares to be able to collateralize the selling of the call. But the buying of calls means you don't need 100 shares. You just need the cash to pay for the premium that the seller is going to collect from you if you're buying a call on like a Palantir. So again, I bought a lot of calls on Robinhood last year. I was the degen who was crazy enough to think that Robinhood would go to $20 when it was at $8, and I made a lot of money on that. But now I'm not buying the calls for Robinhood to go to $100 because I just don't know in the next couple of years if it goes to 100. I hope it does, but I'd rather stack more shares and sell calls against them along the way versus buying them. So there's a time and a place to really buy options, and that's usually when the stock is heavily undervalued. When it's not, I think that's when you sell them. I'm surprised NVIDIA isn't bouncing back up. Yeah, I agree. I am surprised NVIDIA is not. Wow, 134, dude. 3% down on the day. She is getting a bit of a hit. Yeah, the Options 101 video. So I did this a while ago. Let me link it right here. I really do think anyone who cares about this, do not pay for a course. This is a free 3 hours of me walking through it very in depth. And if you are a complete beginner, you have no idea what I'm talking about, I think this video will do very well for you. And you can watch it multiple times to really hone in on it, which is what I did do. When I was learning about this stuff, I looked at other YouTubers. I had a little notebook and I watched videos multiple times, and it took me about a month, and then I felt pretty comfortable about it. And then I started practicing. So this is not some scary thing that's going to take a year to learn. It's going to take some hard work, but I think within like a month, most people can begin to understand it. We will do 301 eventually. Dude, next week is going to be crazy, bro. Next week, I'm literally leaving to DC on Sunday. I'm not going to be back to Jersey until Friday. Because from DC, I'm going somewhere else, and I'll be gone the whole week. So I think Jason and I will be able to do Options 301 towards the end of June. Adam as well. Adam is a great option selling channel. Dude, Adam's channel is low-key blowing up right here. He's been getting a lot of views on his videos. He's at almost 6,000 subs. When he was on my channel, we was at barely 1,000. Here's his channel right here. He is also incredible to see his examples, and he's very transparent with his account. So it also helps him. It also helps anyone to learn and walk through the examples. Dude, and he's making a lot of money. He's making a lot of money every month by doing this. Now his portfolio is bigger, But as your portfolio grows and you're able to leverage this, it's not the worst idea. So no admit all next week. No, I'll be there for the market open every day. I don't know if the market close, I think, is going to get hit next week, at least like 3 or 4 of the days. But the market open should be able to happen pretty much every day. But yeah, market close is definitely getting a hit. But you guys will see where I'm at next week. I just can't say it yet, but you guys will see it. But I'm going to be gone for a week, bro. Like, I just realized, like, yesterday, I'm like, dude, I'm not going to be back in Jersey until Friday. So it's a lot of Airbnbs all of next week. I think I've spent at least 15 grand on Airbnbs and flights. Not 15, probably 10 grand this whole year. So I've definitely been helping the Ubers and the Uniteds and the Airbnbs of the world. Are you doing anything for S&P inclusion? Dude, that's the thing. I might not be live for S&P inclusion on Friday. Like, I think I have a flight on Friday at that time. So I kind of hope Robinhood doesn't get in because I want to be live when they get in to see it. But I also hope on the airplane I get the notification that Robinhood got in. So I'll have internet to be on Twitter, but I won't be able to be live. And so if they don't get in, though, I'll be at least happy that I wasn't live because I don't want to go through the disappointment of them picking Williams-Sonoma over freaking Hood for the S&P. Where's Arnie been? Arnie's back in Italy. He came back like 2 weeks ago. And he should be on Palantir Weekly tonight. Yeah, you guys will see him tonight for Palantir Weekly. So, yeah. We will be able to talk to him today. But he was in Southeast Asia for the past month and living his best life off of his beautiful Palantir gains. Hims right here, 5.3%. Of course, Mr. Nate makes an appearance. I was surprised when Skrelly said he's not long Hims, bro. I guess even he felt that, it pumped a little too hard from when he bought it, but he does think it's cheap. He does think it is still cheap at these levels. June 6th is the date for the S&P. June 6th is the date. So next Friday, basically. No Starlink plane. Well, Starlink said they're expanding to United, so maybe I get some United Wi-Fi that's way better than before. I don't know if every flight has it, but if they I can't even watch YouTube videos on United because you can't do really streaming. You can only look at Twitter, and because it's text-based updates. But if this flight has some Starlink, then that would be nice. 0-day expiring puts now lead calls on S&P by more than 2 million intraday. Wow. All right, so people definitely betting the S&P is going to finish red for the day. S&P is still down about 0.4%. Even if we are down 1% of the day, we are going to end the month up 1% or up 5%, which is going to be nice. Yeah, the rebalance happens on June 20th, but the announcement of the rebalance happens on June 6th for S&P. Did you watch Elon's SpaceX speech yesterday? No. Elon had a SpaceX speech yesterday? Did he? When did he do that? When did Elon do a SpaceX speech? Did he post about it? Let me see. I kind of slept early last night, so maybe I missed it. How long was it? How long was the speech? It was an amazing speech. Dude, when was this? I completely didn't see this. Farzad had a video. Is it on his YouTube? Let me see. Let me see if it's on his Twitter. Wow, I did not know about this. After the Knicks won, bro, I went to bed last night. I was just knocked out. Oh, it's a 42-minute speech. Holy crap. Yeah, he did. I did not see this. Yeah. Okay, I have a clip from it that Elon reposted. We can watch the clip. I did not know he did a 42-minute speech last night. Okay, here's one of the clips from this. Here's a couple of them.
Emphasize, even with the rocket that we'll be launching just at the end of this year, it will be capable of making life multiplanetary, and thereafter it's just about continuing to hone the efficiency and capability of the rocket and reduce the cost per ton and reduce the cost per person to Mars. And like I said, ultimately make it so that anyone who wants to move to Mars and help build a new civilization can do so. So anyone out there, like how cool would that be? And even if you don't want to do it, maybe that you have a son or daughter who wants to do that, or a friend who wants to do it. And I think it would be the best adventure that one could possibly do, is to go and help build a new civilization on a new planet. It's important to emphasize, even with that are both self-sustaining and strong, I think is going to be incredibly important for the long-term survival of civilization. So, like, just I think any given civilization is likely to last maybe, I don't know, 10 times longer, maybe much longer, if it is a multi-planet civilization than if it is a single-planet civilization, because there's always some chance that us humans could do something crazy like World War III. Hopefully not, but it's possible. Or that there could be some natural event like meteors or supervolcanoes or something that we don't expect. And then if we only have one planet, then that could be curtains. But if we've got two planets, we keep going, and then we go beyond Mars ultimately to maybe the asteroid belt, the moons of Jupiter, and beyond, and ultimately to other star systems. And we can be out there among the stars, making science fiction no longer fiction.
How many people genuinely believe in Elon's vision about this multi-planetary traveling, going to Mars, civilization stuff? How many people genuinely believe in that when he talks about this? By the way, we got a Robinhood update, folks. Vlad just tweeted, Robinhood Strategies doubling its AUM in the past month, 250 million with 75,000 funded accounts. They launched this at the end of March. They had 40,000 accounts at the end of April with 100 million AUM. They now have 250 million AUM with 75,000 accounts. I have $1,000 in Robinhood Strategies. I want to get that to 10,000 by the end of the year. But this is basically their robo-advisor. This is basically their managed portfolio that's going to charge you a maximum of $250 a year, whether you have 100 million or 100,000 or 1,000 with them. You're only going to pay 0.25% on your AUM to be able to have them actively manage your accounts. So pretty incredible. Pretty incredible growth for Robinhood right here with 75,000 accounts now. Robinhood up about 1.4%. Tesla 360, Palantir 129, NVIDIA 135. AUM is assets under management. Assets under management. Okay, a lot of you guys are saying you don't believe in what Elon's saying. So let me do a poll. Let's do a poll on this right here. Because, I mean, this is a pretty big vision that Elon's laying out. 53% of you said Palantir can close above 130. Do you believe in Elon's multi-planetary vision? Do you believe that we're going to colonize Mars and Starship's going to help us go to Mars and we're going to start space colonies and all that stuff? Do you believe in all that?
Straight to Mars, you have to create this elliptical orbit with Earth at one point and Mars at the other side, at the far end of the ellipse, and then time the where you are in that ellipse to intersect with Mars. And this is the orbital transfer, how you do orbital transfer from Earth to Mars. And if you look on your Starlink Wi-Fi router, you'll see this image, because the Starlink Wi-Fi is Starlink internet is what's being used to pay for humanity getting to Mars. So I'd just like to thank everyone out there who's bought Starlink, because you're helping secure the future of civilization and helping make life multiplanetary and helping make humanity a space-faring civilization. Thank you. So you can't just go.
59% of you say yes. 59% of you say yes. Look, here's my thoughts. I don't know if it's going to happen, But I think it kind of needs to happen because eventually this Earth is not going to exist in the way that it exists right now. And so I do think we need to like expand beyond our horizons. The problem is, and here's my thing, Elon literally couldn't get Congress to stop spending money. How the hell are we going to get the world to agree that we need to go to Mars? Right? Like it's what, like just being realistic, bro. We could not cut spending in this country in a tax bill that is going to increase our deficit by a couple $1 trillion. How are we going to, because this has got to be a world coming together moment, right? Not like a just America goes to Mars. Like I'm sure we're going to need other resources. And if it is a unilateral America goes to Mars, then that means Republicans and Democrats would have to agree for the resources that are needed to get us to Mars. Like I don't think this can only be done by the private sector. And you wouldn't want it to be done by the private sector. You would want to have some level of government accountability to help get this done. Like we couldn't cut our spending. How the hell are we going to go to Mars? So I think it's a worthwhile ambition. And the sad thing is, I don't know if in our lifetimes we're ever going to have someone as ambitious as Elon who's trying to do this in conjunction with the other 17,000 things he's doing. But and realistically, I don't think Elon's going to be alive to be able to see us, colonizing Mars unless we get it done in the next 20 years, which, I mean, I don't know. Do we actually colonize Mars in 20 years? Maybe we go to Mars in 20 years. I think that's kind of realistic. We could go to Mars, even though that I think is a bit of a stretch. But colonize means we set up, a civilization. That I don't think that's going to happen. Not in 20 years. But yeah, this is going to be a century-long project. I don't think in any of our lifetimes, like if all of us live for the next 100 years, I don't know if we're going to see meaningful space colonization. If we can't find a way to reform Social Security, how the hell are we gonna get to space? I don't know. A little bit more skeptical about it, but obviously I do like Elon's vision. And regardless, even if we don't get into Mars, the SpaceX, just by the pursuit of trying to build this, is going to create so many amazing products with Starship that they're going to be able to print a lot of money with other products like Starlink, even if their core use case that Elon cares about doesn't happen in terms of going to Mars. Also, is Mars even habitable? Like, isn't Mars like would it be the best place? Like, I heard one theory is we have to nuke Mars to like unleash all the water or something. I was reading about this like a year ago. So even if we did colonize Mars, I mean, like, there's like so many questions on how do we make it a place where people can live. And I think Elon's painting a really good vision to get people excited, which he should because he's an ambitious entrepreneur. But do we actually have a shot to get on that planet? Yeah, terraforming. Exactly. That's what it's called. Terraforming. We need a ton of terraforming tech to get there. That would be wild, though. In our lifetime, if there's a city on Mars, like, that would be crazy, bro. All right. Well, that's what we got for today. 3-hour stream in the books. I think we're going to end it out here. We'll be back at 3:45. Steve will join the show today. And yeah, we'll keep going from there. Last trading day of May was a fun month. We're probably going to end up about 5% green on the day or on the month. Palantir, hopefully we can hold at least 5%. And I learned that etc. is etc. I'm probably gonna keep saying etc. I don't know where the hell et or et ended up being the de facto pronunciation, but I like the ex a little bit more. So I think I will keep saying it that way. But you learn something new every day. So that's what we got. But we'll be back on the market close at 3:45, and we'll get Steve to talk a lot more about the yield max ETFs as well. All right, word of the day. What do we got? Word of the day. This is going to be a little bit of a weird one. Dactylogram. Okay. A fingerprint. Has anyone heard of this? The only evidence left behind was a long dactylogram smudged across the shattered window pane. He compared the dactylogram to dozens of archived prints searching for a match. A fingerprint. Okay. There you go. I've never, my favorite dinosaur. Yeah, it definitely sounds like a dinosaur, bro. Absolutely sounds like a dinosaur. A fingerprint. All right, cool. Dactylogram. If it's a fingerprint, you say fingerprint, right? How can you say this correctly, but you can't say Estee Lauder? See, again, I just disagree on a fundamental basis on how you guys think Estee Lauder should be pronounced. I don't agree with it. I wish I did. I wish I saw eye to eye with you guys, but I don't. So, there are some words that we just disagree on in terms of how we think about. Nonetheless, I'll be back on the market close. Elon and Trump, 1:30. So I won't be streaming it. I'll be posting it on Twitter, some clips of it. So just, you can follow along Twitter. Twitter's in the description. And we will definitely cover it, getting it to the market close, and we'll keep going from there. If I don't see anyone on the market close, have a great weekend. I will be back for the market close and for Palantir Weekly. I don't know if we're doing Sunday futures this week because I'm going to be traveling to DC, but we will be live on Monday for the market open. And yeah, if I don't see anyone later today, then have a great rest of the weekend. All right, that's it for me. I'll see you guys on the market close. Bye, everyone. Have a good one.